cloud. Okay, so I'll also post the replay of this later for you guys. So we are going to keep this super casual. This is for you guys. I'm in Kansas City right now, by the way. If you've never been to Kansas City, it's very cute, as I found out. My hands still smell like barbecue. Like I've washed them, I've used wipes, I've done everything. Let's get everybody. Mute everybody. Participants. Yeah. What's happening? Mute.
There you go.
Oh, mute all. Mute all. Okay, so you guys are all muted, and if you do have a question or whatever, raise your hand and we'll kind of go through whatever. Anyways, I was just saying, I still smell like barbecue. So everyone who's been asking if I ate the barbecue, the answer is officially yes now, and I can't get the smell off my hands. Rumor is that's a sign of good barbecue.
It's a good barbecue. That means it's good. Yeah. If you've washed them, wiped them, done everything you can in the barbecue, that means it's good barbecue.
Yeah. So I've been touring properties for how long have I been here? I'm very tired. 2 days. I've been seeing all different parts of town. We've got some more places we're going to go to tomorrow. I've got videos of properties that are going to be for sale. We're going to talk a little bit about, you guys may have seen my post asking your interest in Turnkey Light, which is kind of a different concept. So we'll talk about that. That's a big one. So I thought we would kind of start while people are jumping on, just a quick. So Ben over here, we were talking, I deal with the buyers. I talk to you guys all day, every day. I know what you guys are asking, what things you're interested in. He's on the provider side. So he's kind of on the opposite end of the spectrum of you guys. So there's always this like meeting of the minds of what's practical for them to offer, what kind of stuff can they give you while also still being fair to them, right? Because it's not infinite funds. It's not, you have so much time in a day available.
Right. Yeah.
You guys have probably heard me say, like, one reason I don't post the names of the turnkey group or turnkey providers is because if I do that, they're going to have so many phone calls from people who may or may not ever buy a property. They don't have the bandwidth to deal with that. So the provider's on a very different side from you guys. And then, he doesn't always know what you guys want. So it's this kind of, I'm this kind of middle person of trying to like get everyone talking. So one of the things that him and I were talking about is kind of where we are in 2022, which really been kind of the case for a couple of years now, the inventory shortage. You guys have probably noticed that turnkeys are being sold a lot more without tenants now. What's this mindset around turnkeys? Because I have to share pardon the analogy, but it's very, I wrote it. Oh, the ass wiping contest.
Well, okay. So just to kind of back up a little bit. So, hey guys, before we start talking about Ben from Kansas City, how you guys doing? Thank you so much for spending the time with us here. So we just want to give you guys a kind of a informal sort of hello from Kansas City. Obviously, Allie's here and we're doing the tour and having a great time learning. She's learned a lot about our market and properties and what we're up to. So we just wanted to jump on and do, like I said, a quick kind of informal share and Q&A and all that good stuff. For those of you guys that are tuned in and turned on, you're here. So we appreciate that. So I've been in this business full time for 11 years in the turnkey world, real estate turnkey world. It started off in 2010. 2010 and 11 was sort of the early years. People didn't understand when we said turnkey property. They didn't even know what that meant back then. Obviously they didn't know what A, B, C class, people that wasn't even, people weren't using classifications back then. People didn't understand what a turnkey property was. And the markets were way different. We were just still feeling the burns of the global financial crisis, right? Where real estate was super depressed. Nobody wanted to buy anything. Everybody thought I was absolutely nuts for quitting my nice high paid job and, diving headfirst into real estate in 2010. But ignorance is bliss. And, if you don't know, no, nobody can tell you no, right? So that's the mindset I had at the time. But anyway, I'm digressing. But the point is, when we started talking about turnkey properties, we had to sort of educate people on what that meant. People would say, oh, turnkey, like a restaurant that's already got, whatever, and you got your manager. It's like, well, no. Sorry, guys. Are we still, we're good here? Okay, I'm gonna make sure we're still on. Sorry. Thanks, Deanna. I see you nodding there. So we had to educate people on what that was. Part of the education was some sort of insulation or some sort of wrapping. You got to understand, we were back then selling properties for like a fully rehabbed house for 50 or 60 grand. But in most cases, that person was from somewhere else. And you guys might not be from Kansas City, but like we're talking about people that from other countries, right? Completely around oceans and on the other side of the world. And so when we were first walking turnkey properties out the door, we had to level those properties with some assurances. The market was very different. People were scared to even buy real estate, right? The banks weren't lending to anybody. It was all cash buy, right? So it was a different time and place. And so what we were offering back then was also a different product, I guess, let's say at that time. Nobody was talking about neighborhood classifications back then. That was a commercial real estate standard, not a residential one. And what we were doing was giving people, like, it had to have a tenant in place. Obviously it had to have a manager in place. We would provide like long-term warranties, not only like warranties with the property itself, but also warranties with the actual like rent being paid, which I look back and look at these things now and I think, wow, we were really, what were we doing back then? We weren't selling houses, we were selling something else. But anyway, the point being is as things change, 2020 now is such a different market as far as price, rent, returns, neighborhoods. We're talking about A, B, and C. We're talking about different levels of finishes. I mean, there's just much more to the conversation now. But when markets change and when supply and demand changes and when whatever, just the general markets change, things around that change, right? So turnkey properties is what Ali was alluding to. The term and the moniker has changed from what it started off as being, what she said was like an ass wiping contest. Pardon the language, but what she means to say is like, how can we like,
Oh, it's what I meant to say.
right? But how do we, like, okay, like the investor, we're like stripping out all of the risk of an investment.
Yeah.
Was basically what was happening. Like throw the buyer in a padded room where they can bounce around with whatever, never get hurt, and like kid gloves and the whole nine. But that was, again, that was a product and a concept and an idea that people weren't accustomed to. And so a lot of those things were just symptoms or solutions to the symptom of people not knowing what it is that we were talking about and what we were actually delivering. And so turnkey became, and in most people's minds became, okay, tenanted, it's been fully rehabbed. It's been basically all the things that we were educating people about 10 years ago. I said something earlier with Ali started laughing, but this has probably been at least 5 or 6 years for me. But I guess as far as, you know, turnkey providers are concerned, there's a lot of people that are still padded room. What'd you say?
Well, I mean,
there's a lot of things that are coming with the property that aren't necessarily to do with the property with a lot of turnkey space, but there's a lot of other things that are changing. People are taking appraisal contingencies completely out the door. People are not even like, there's some turnkey providers that won't even talk to you unless you're an all cash buyer, waiving contingencies and inspections. Like, so a lot of what used to be like, hey, inspection, appraisal, we're warranting everything we're giving you the tenant, you know, here's the no risk investment, which sounds even weird to say, right? You all are investors. Like, what does it mean, no risk investment? It doesn't really make sense. But anyway, we're changing from that to now the turnkey world is now in some circles, it's you have to be all cash. We're not even going to talk to you about an inspection, and you can appraise if you want, but it doesn't matter. You're buying the house regardless of what some appraiser thinks the opinion of value is, right? So in that breadth of conversation, there's a lot of space. There's a lot of space for what turnkey meant 10 years ago. And there's a lot of space between now what turnkey means to a lot of people. And so Ali and I have been talking about that about 5, I guess, what was it? 6, 7 years ago now. All the people that I work with and like Ali's and different other people that I work with, it was like, hey, I'm not putting tenants in these properties anymore before we close. Right. So like, I just quit doing that. I quit occupying properties with tenants prior to closing to investors. There's been several reasons why I do that. We'll go into more detail if we want. We can Q&A that one out. But that was one of the things that just stopped all of a sudden. And then I said, well, look, I'm giving people full inspections reports from a third-party inspector of their choice. We're going in and doing repairs that we agree to, safety, whatever it may be. So the property is done. Now, I'm not going to stay on the hook for 12 months because who knows what the tenant may do or naturally or whatever the case is. Like, properties are properties. They require maintenance and they require, sometimes things happen. This is a living, breathing organism for all intents and purposes. And so properties don't just sit there. They change. Sometimes they do require the gutters being cleaned or whatever the case is. And so I quit doing like this 12-month extended warranties. And I started doing what really short-term warranties were like 90 days or something at that time. And now I don't do warranties at all. My warranty is, let's go third-party inspect this thing. Let's agree to what needs to be fixed. And then once your tenant moves in, if there's some little issues that sometimes pop up, like, hey, the towel bar's loose or whatever the case may be, like there's some what I call tenant load issues that sometimes take place. I'm happy to go in and take care of tenant load issues. But I don't do the full warranties. We don't occupy with tenants in place. Sometimes we'll do some, but most of the time we don't. And again, this is just a little bit of change in the turnkey. What does turnkey mean, kind of? And so Allie wanted me to talk a little bit about that, like how it started, what it is today. We're certainly not as, I don't know what the term aggressive. We're certainly not as aggressive as some turnkey providers in the sense that what they're saying is turnkey and the terms of all that. But what I feel like is we're probably the most fair when it comes to the whole picture. One of the reasons we don't like to occupy properties for people in advance is because, let's say you don't close or something happens with the loan or whatever the case is where it doesn't close. Well, now we have a tenant in a property that we didn't really want a tenant. We just wanted to sell. And oh, by the way, we're in the hottest market on earth and we can just stick a sign in the front yard and get it sold for probably over asking. So what does it make sense to put a tenant in there for us? It doesn't. It's more of a hindrance. And so there's certain reasons. And not only that, property managers do their thing for a living. We do mostly property, not property management and leasing. And so we rely on property manager rent estimates to tell us what the rents are rather than our own, right? So like, we really want property managers to be really, really big ball players in this space. And that means not only leasing your first tenant, but every other one after that.
Well, and one of the reasons I wanted to just kind of go through that, aside from it's a great warm up while you guys are all kind of logging on, so we don't hit the really important stuff before you're on to miss it, is, and this is not specific just to Kansas City. This is happening in Birmingham. This is honestly, I don't know. When I started buying turnkeys, it was 2011. And it was an ass wiping contest, which is now my new favorite phrase, but it was true. Like he was saying, everything was padded, everything, the warranties, guarantees, tenant guarantees, you're not close, it's post rehab, the tenants are in. Like the way that turnkeys were set up is that it was an ass wiping contest in the sense of the providers were competing against each other to get your business, because there were so many buyers back then and so many turnkey companies and properties, and every mom and pop shop had opened up a turnkey company. So like Ben, for example, would have to offer that stuff in order to compete with other turnkey providers. Now it's not the case. There's a shortage of inventory. There's not nearly as many turnkey providers. And quite frankly, the turnkey providers don't need the business like they used to, because you already have buyers wrapped around the block, basically. And so I'm going to try and do a lot of work on this in terms of the turnkey mindset has really been, for good or for bad. It used to be great, but now it's not a padded room anymore. Like it's, people have been investing in rental properties since the beginning of time that were not full of guarantees and warranties and tenants in place and fully rehabbed and all that kind of stuff. Because, some of this mindset, when we start talking about the turnkey light option, is the whole idea with this is just for you guys to have the mindset of you're still getting a quality asset. If you buy a property that is slightly less than perfect, or the numbers are slightly less than perfect, it doesn't mean it's a bad investment. It could be stupidly profitable. Now I got my first turnkey 10 years ago. And over the 10 years, aside from learning everything, is the rents have gone up tremendously. I've just seen everything that happens in a property in 10 years, and they are so stupidly profitable now, 10 years later, that now I'm seeing that perspective. And that's what Ben's trying to educate people on too, is that it's not, the only way to profit is not by getting this picture perfect, you know, everything handed to you type of thing. Is we actually want to be real estate investors. Turnkey's kind of opened up, you know, maybe some people maybe shouldn't have been investing, you know, not everybody's cut out for it, but it made it so soft and like such a soft landing spot. It kind of opened that door. We're just not in those times anymore. So if there's something less than perfect, if there's whatever, here it is. It's kind of, the men are going to get separated from the boys. That's my
it's just,
warning.
it's a,
like,
I mean, look,
you've got to adjust your mindset of the perfection is no longer an option. So
it's
now
just,
that we've totally put the negative all over, like,
no,
let's
it,
talk good about Turnkey.
the thing is a supply and demand, and she's been saying it from other providers. I mean, I talked to other people in the business a little bit, but you probably talk to more kind of providers than I do. We kind of stay in our own boxes, but the general thing about the market, obviously we have the lowest amount of inventory, available inventory that's for sale. So when you sort of reverse that back into our shoes as sort of the entrepreneurial guy that has to go buy the supply before the product is created, we have even lower supply also. So we're looking at low supply numbers. So our prices go up. We're looking at low interest rates, and everybody wants to be an investor now, right? So it's kind of the latest, I don't know, the late night thing. They're teaching guys how to come in and be no money down wholesalers or whatever the case is again. So there's a lot of competition, I guess is what I'm saying. So even for the stuff that no banks would loan on, the distressed assets, that kind of stuff, there's still a fair amount of competition, which again, supply and demand is a pretty simple curve. The more demand there is and the less supply there is, then obviously the price is gonna change to meet that, right? So
which
we've
translates to,
so I
they
guess
don't need your business.
well,
So-
it's not, so it's right, but no, I mean, it's not so much that, it's just the fact that there's a lot more buyers out there. The local guy that can't find a house for his family, and he's got a, you know, been well approved and the whole nine, he's been putting in offers and everybody's paying over asking, and he's, you know, that's a guy that when he does find his house and he gets his inspection report because his agent insists that he does, he's not going to really ask for much. He just wants the house. He's not going to say, oh, well, you know, the kitchen door was loose on the, you know, I'm not going to close until you fix that. He's going to say, dude, I don't care. Please get me in the house. Right. So it's a different, again, we're just in a different environment. And so all the providers nationwide, I mean, the ones that aren't just like, hey, you can't appraise and we don't care and you're just buying cash and it doesn't matter. Like those guys maybe are doing it the other way that they're doing it. But for those of us who like actually have to sell at what value is, and like we're actually trying to not gouge people or do, you know, kind of the underhanded thing, we're trying to be fair and sell things at value, then it becomes a pinch, right? It becomes a pinch to be able to buy a house, sell it at value, do a massive, like really top down rehab, and then sell it for that top price, right? So there's a pretty big stretch in there, and the numbers are just getting tighter. The spreads are getting tighter. There's a lot of moving parts that go into that whole process, and that you can't really quantify what the time is worth, but definitely it's worth something. And so a lot of times, and I was talking to Ali about this, we come across properties that are like really good properties, functionally, structurally, mechanically, like all of your bones and your guts are solid. The bones are strong, the guts have been updated, right? And what I mean by that is like your framing, your roofing, your structure, your foundation, all that are super strong. And your guts have been updated, your plumbing, your electrical, your mechanicals. Those have all been updated, right? Now you may have dated finishes, right? Maybe the bathroom hasn't been updated in 15 or 20 years. Maybe the kitchen's dated. Maybe you've got some older windows or carpeting or what, you know, whatever the case may be. Well, I think a lot of people, and you know, Ali was saying, well, yeah, I mean, a lot of the turnkey folks would never even buy that because they wouldn't believe that anyone would rent something like that, which is like, well, that sounds kind of crazy because since the dawn of time, people have been renting houses. They're not freshly rehabbed, right? That's been forever. Like all of the local investors, every property I ever owned as a landlord before I went full-time into real estate, was something that we'd go in and maybe do a little paint or whatever, but we weren't doing rehabs on houses. We were just putting a nice house that was functionally, structurally sound and functionally not obsolescent, right? So it all works. Maybe the tile color is not the most updated, maybe the paint color or whatever, like maybe there's cosmetic finishes that aren't brand new, top of the line, but we didn't pay the top of the line price for that asset either. We're not asking top of the line rent. But that being said,
because we'll switch to Turnkey Light and keep going with that. Okay.
Yeah. Okay.
I want to pause on that just for a second because I wanted to drive home the mindset thing just so you guys are in the mindset before we get into the exciting stuff. And Toby asked if we're going to go over some of the inventory. I had a list of a couple of things, but while he was talking about that, so what I thought we would do is, since we've thrown out all of the boring kind of negative stuff now, let's get back to the exciting stuff, which is the properties.
Yeah.
What I thought we can do real quick is just go over one property that they have. Is this available or it's coming or available now? Okay. Go over one of the properties, let you guys ask questions about this property, like if you want details of the neighborhood, whatever. And then we'll kind of switch back to going, like what areas do they focus on? What areas do they blatantly avoid, for example, like where would they not buy? We'll get into the Turnkey Light discussion. And then kind of in the middle of that, I want to keep letting you guys ask questions because I don't want it to just be us talking, because we want to know what you guys want to know. But that way we kind of keep it exciting. And what he was just talking about, we'll keep going with that in light of the Turnkey Light. That pun was not intended, because that what he's talking about plays into that concept for buying for you guys. So I don't know if the easiest way, if you want to just talk about, I don't know if am not going to dare try and share something because I'll probably log us out and kick us out again. So I don't know if you can see, you can kind of see it, right? Like, yeah, you can see it good enough.
That's a pre-rehab, that's a pre-rehab photo.
Yeah. And obviously like this property and all of them, we can send all the pictures, the pro formas, all that kind of stuff. But just to kind of breeze through, like just to give you an example of a property that would be available, because let's be honest, that's what we're all here for.
Okay. Yeah. This one's in Independence.
Toby, was that you asking about Independence before? You can throw in the chat if you want. I'm gonna go see Independence. Are we gonna see this one tomorrow?
Yeah.
I can go spy on this property for you guys tomorrow. And I know you had asked if I was going to Independence, but if you have any specific Independence questions, throw them in the chat while he's chatting.
This one's a single family home on South Grand and Independence. This is a B-rated neighborhood, 2-bed, 2-bath.
Do you want to tell them like what goes into a B? Like, what do you consider to be B neighborhoods?
Yeah. So you're gonna have. You got crime is gonna be relatively low. You're gonna have a working class kind of neighborhoods. Your schools are gonna be not 1 out of 10 or 0 out of 10, right? In some cases. And then also, generally speaking, and this isn't always the case because you have a lot of different errors of development. So where like post 50, the World War II, post World War II boom, right? That was sort of an error of development. A lot of those neighborhoods, just by the location and nature of when they were built, those end up being B neighborhoods. But that's not necessarily the defining characteristic as far as age of home. More so it's the demographic and the makeup of the neighborhood. Some of our neighborhoods are like spitting images of one another as far as the year built, the style of home, and like all that stuff. We have some neighborhoods are 100-year-old homes. One neighborhood might be worth the average 150, and another neighborhood with the exact same style and size and characteristic of home could be easily worth 350, right? So some people will classify neighborhood standards by age of the home and that kind of thing. We don't. We're actually classifying a neighborhood, so it's a little less scientifically I don't know, calculatable, I guess. A lot of it is not an algorithm for it. There's not a, oh, okay, if it's this, then that. A lot of it has to do with just understanding values and what average rents are for areas, for average prices per square foot, and then rolling that back from there and understanding that, okay, yeah, based on that, this is a C neighborhood, this is a B neighborhood, this is an A neighborhood. This one's a B neighborhood. This is an 850 or 900 square foot home that's going to rent for $1,000 a month. That right there kind of gives you an indication just by itself that that's a B neighborhood. C neighborhoods aren't going to rent for that much per square foot.
And 1,000 monthly, did you say it's 125,000 for the house?
Yeah.
The purchase price. Before he keeps going with the numbers, if anybody was in the group last night, there was a bit of a very loud conversation that happened quickly. So one thing I'm going to tell you before he goes further with the numbers is, like he said earlier, he's the provider of the property. End of story. So when they're presenting these properties, they're presenting the properties and the numbers exactly as they are today. And if you were around last night in the Facebook group, I posted that and it blew up very quickly. So what I've since learned, and this is going to be different for different counties, is this one is Jackson County, right?
Yes.
Yeah. So this is Jackson County. So the tax amount labeled in this pro forma right this second is the exact tax amount that is being paid on the property. So Ben's job is to tell you the facts of the property, which he is absolutely doing. What we've since come to realize, or I've since come to realize, is every other year, the new, whatever you call it, tax assessment happens, and the tax rate is going to be based on the new purchase price. So in 2 years or less, this tax rate is going to change based on the price that you pay for the property. So what I've been talking to them about, because I know from you guys, and if you guys have any feedback on this in terms of preferences, whatever, you don't care what today's tax rate is if it's going to be drastically different in 2 years, because everyone I talk to for the most part wants to be very conservative. So you don't want to hear how low the taxes are today if it's not going to be accurate in 2 years. So I'm working with them to adjust these pro formas. So when they send me a pro forma for me to share with you guys, it's actually going to be the future tax rate. And then I'm going to figure out some clever way of saying, oh, by the way, extra bonus for the next 2 years, you get this crazy cheap tax rate. So your return is going to be astronomically higher for 2 years. And then it may change. And even Ben said, it doesn't always change overnight. It doesn't always change that drastically, but I want to give the most conservative numbers for you guys, because that, again, that's what I'm assuming you guys want, but we haven't updated the pro formas yet. So when he goes through these numbers are accurate for this property today and for up to 2 years, if I'm phrasing that all right. And then it may change because of the tax rate. And I'm going to figure out a way to present to you guys the difference in the tax rates. So that's the caveat for this number, is this pro forma has not been updated. This is today's tax rate. We acknowledge that it's going to change at some point. I'm going to figure out a way to give those numbers to you. And with that said.
Yeah. So there's.
I'm not going through that again.
Yeah. So we were talking about that. And again, I said, well, it's kind of tough to give a future of whatever, because these are right. Even the purchase price, that's going to be different probably, or the actual value of the house might be different in 2 years. The rent amount might be different in 2 years. So I was like, well, and again, I was kind of explaining to Allie, like my job is to make sure that I'm given accurate information, right? Square footage and whatever, and finishes and this, and rent estimates from property managers and that kind of thing. Like that's where we need to be. That's where I need to be. The numbers, they don't matter to me. Like it doesn't matter if it's a 12 cap or a 13 cap or whatever. Like I'm not cap rate driven. We don't price these things out to be cap rate driven. We don't put the rent amounts to be, we don't put anything in place to hopefully find some bottom line. The bottom line just figures itself out. My job is to make sure the house is in good quality shape and all that, and that we're pricing it at a fair value and we're giving an accurate rent estimate. So that's kind of my job. And I work with a handful of, folks who present in maybe a slightly different fashion, right? One person might present one way, one person might have a 5% vacancy, one person might have a 15% vacancy that they like to show their clients. And so Allie and I are going to work together to form a pro forma that she's comfortable with based on speaking with you all, right? So I can go through kind of the numbers and the cash on cash and this kind of stuff, but I don't really want to do all that now because we're going to go through and we're going to have a different pro forma to work from. Yeah, another couple of changes here. We have a lender who does a really great job for us on single family investments, conventional loan broker, who has a 15% down option, 4.5% interest rate, right? Which we can't quote because we don't know what your credit score is, and it's based heavily on that. But
with PM, is that no? Does he do it with no PMI?
15%? There's some PMI based on the credit score.
Okay.
So it's not again, these are all like, this is why I say, is it a 12% or is it a 10%? To me, they're the exact same number, right? Yeah. Because again, is it a 4.5% interest rate at 36 months or 360 months? I don't know. It depends what your credit score is, right? It depends what your profit and loss looks like. It depends what your DTI looks like, right? So when we put these pro formas together, everybody needs to understand that whatever let's say the cash on cash return, this one, what I'm looking at now says 12.28. What I can guarantee is that it won't be 12.28. It will be something else. Does that make sense? So it may be 11.28. It may be 13.28. It may be 10, right? What I can guarantee is that it won't be 12.28. Not unless some weird cosmic coincidences. Like, do you guys understand? Because there's so many assumptions that we're putting in here. Percent down, interest rate. Those are going to be based on you and your mortgage broker, your credit score, your wife, whatever. Those are things based on you, right? Not based on the house or based on us. We couldn't tell you, right? So it's like, is this a 7 cap with a 12% cash on cash? Well, okay, yeah, pretty close to be, right? But based on the numbers. So I guess I don't want to get off my soapbox here a little bit, but the point I'm trying to say is that whenever I do these pro formas, and I've said this for years, literally, the number you see in the pro forma, I guarantee you that will not be the number. Mm-hmm. Like that I can say for sure, right? It'll be close to it. We've done this for a while. This is a template. This is standard stuff. We're not, there's nothing we're coming up with here. Only the fact that I know that it's not going to be a 12.28, right? It's going to be a real world, weird world where that worked out exactly that way. And so my advice as an investor, if I'm looking at this, I'm giving this a 2-point differential either way. So if it says 12, I'm thinking anywhere from 10 to 14. If it says 13, I'm thinking anywhere from 11 to 15, right? So like you should give yourself a couple point differential. And you should also think to yourself, if I'm buying a 10% cash on cash, am I comfortable with an 8 cash on cash? And if I'm not, probably don't buy that house. And I'm not trying to tell any of you not to buy houses. I think it's a great time to buy. Interest rates are low, inventory is low, prices are going up. You guys need to be buying. But if you're not comfortable to say, hey, this looks like a 10 cash on cash, but it could be an 8 cash on cash. I just can't live with the 8. If that's the case, don't live with the 10. All right. Like, just don't. And I hope that makes sense to everybody. And I'm not trying to, again, I'll get off my soapbox here about that.
Well, it goes back to what we were talking about earlier, is like everybody I really want to work. And I think it's starting with turnkeys, is that these are not perfectly packaged things anymore, where when it says 12.28 or 28, it's not going to be at 12.28. That's always been the case. And so it's again, resetting that mindset of there's going to be fluctuation. There's never a guarantee. All of these are everyone's best guesses, most educated guesses, and then the taxes and stuff like that are going to change. But all that said, it's still a really strongly performing asset. And I will say the properties that we've seen so far, what he classifies as a B and C neighborhood, I completely agree. There hasn't been anything that I've thought, what's he talking about? I haven't been in one property that I felt bad about. Some of them today, and both days actually have been phenomenal. So the idea is that you're getting a cash flowing property in a good neighborhood. We haven't been in any sketchy neighborhoods. The C's seem perfectly safe to me. There's nothing you know, the Bs to me feel a little bit more like a little more primary home buyer. Like all the Bs I think we've seen, I could easily see being sold to a primary home buyer. So changes like that, but all of that to summarize and say, these are very strong assets. So we can share some of the numbers. Yes, the taxes are going to change at some point, but in general, so this one, he said the numbers, today's cap rate and cash on cash, 7% cap rate, cash on cash of 12.28. Total expenses in a month are 219, rent ballpark 1,000. Even that could change a little bit because it's going to be sold vacant. Am I looking at the right numbers?
Yeah, net operating income, and then cash flow.
Yeah, so ballpark net operating income 730, debt service again changing on all sorts of stuff. Ballpark 538, cash flow 191 a month on a $125,000 property. And in case you missed my very professional picture sharing, it's very cute.
That's a pre-rehab house.
Yeah. So as we're talking about this, and as he's going to keep talking about, go ahead and raise your hand if you have questions about either this property or their properties in general. You can start putting them in the chat or raise your hand so that can start coming in while he keeps going.
Yeah, and I think probably a ton of your questions. Ali's taken a lot of video the last couple of days, and then tomorrow we've got another handful of houses that we'll see that we can take some more video of. So she's going to get a really good idea, be able to share with you guys a really good idea.
I've also walked down a lot of very small stairs in the dark. So I'm literally risking my life for all of you guys, by the way. Every time we do it, I'm like, oh, this is where I break an ankle. And I hope they know.
It's funny though.
There's not power on in a lot of these houses.
Yeah, some of them. So we're giving her the real raw boots on the ground, unedited tour. Like we're walking in the houses where guys are flying around with paint, mud, and like and then we're going into some that like we haven't even like we're getting ready to close on. Like we have one we're closing in, what today's Wednesday, tomorrow. We're closing one tomorrow that we walked in, no utilities on, right? So it's black in the basement. We're
the duplex yesterday. It's these really cool old hardwood floors. And I had my video camera going. I was like, oh man, look at this and look at this. And thank God I happened to look down before I kept going. The one on the left side that has the gigantic hole in the ground.
Yeah.
I was about 3 seconds from ending up in the middle of the earth. I was like, oh.
So
good question on the properties. Are most properties on the Missouri or Kansas side? Fantastic day to ask that question.
Yeah, it's a good one. We've been on both sides of the state line.
I've officially been to KC and KCK, and I learned the lingo.
Yep, KC and KCK. Yeah, we've been on both sides of the state line today. We will buy and sell and hold properties ourselves on both sides of the line. Ali asked me a good question, I thought, and I had a terrible answer, and I don't have a better one. But she asked, what would be the advantage, or why would somebody want to invest in Kansas over Missouri or Missouri over Kansas? Like you have Kansas City, Kansas, which is its own separate city and municipality and government and blah, blah, blah.
And it has higher tax rate. That's the thing. I was like, why would someone want to buy in Kansas over Missouri if the tax rate's higher? Like, what's the advantage?
Yeah. Yeah. So
he didn't know.
If you're not from here, it's sort of apples and apples. I mean, Wyandotte County is the county that is Kansas City, Kansas is located in. Their tax rate is higher than Jackson County, Missouri, which is where most of Kansas City, Missouri is, in Jackson County. A long time ago was a Kansas and Missouri border war. I don't know if any of you guys are familiar or care about this. I'm not originally from this area, so I don't care, but Kansas, like Kansas, they will do things and stay and live and whatever, and they like Kansas, and they just don't really like Missouri. I don't understand it. Missouri people don't like Kansas. They don't like to go there. They don't like people from there. They don't like the Jayhawks basketball. I mean, it's the thing, right? So when I asked her, I kind of gave her a sort of a slap-handed, response. It was kind of a quick response. It was like,
I don't know.
No clue. So the tax rate in Jackson County is a little bit lower than the tax rate in Wyandotte County. You can arguably say that the rents in Kansas are a little bit higher, dollar for dollar, foot by foot, than what you see in Missouri. Overall, I kind of think it's a wash. I don't know if there's enough significant difference to really you know, is there one better than the other?
On another
Gosh.
good point got brought up too is some parts of KCK, Kansas City, Kansas, are actually closer to downtown Kansas City, Missouri. So Kansas City, Missouri is the big downtown hopping place, for example. But the way the borderline works is that some of KCK is actually closer to downtown than other KCMO locations. So, you know, from a
Yeah.
location perspective, what I saw in KCK today was gentrification potential, in my opinion, was
Yeah, it was
pretty
there.
high. There
Yeah.
was some options there, but yeah, like he said, kind of a wash, you know, one way or the other.
Yeah.
But again, it goes
Yeah.
back to, I feel like everything's going to go back to that mindset conversation of these are all performing assets. And, you know, when you start getting into the almost kind of, I don't say nickel and diming because it's not about the money, but like the, you know, miniature details, you know, is whether you invest in Kansas or Missouri going to make or break your investment? Probably not, you
Yeah.
know, so it's, if you see a good performing property, you know, and if it's different a little bit, St. Louis and Illinois, because the dynamics of those two states are very different. So more of that comes into play, but I don't think much of that comes into play with Kansas versus Missouri. Is that's
Yeah.
accurate?
No, you have a pretty, yeah, you're right. Like demographically, socially, sort of politically, or whatever, like whatever the current vibe, like it's very similar. There's just not a lot. And D had a good point in here. Hey D, how you doing, man? Lawrence native here, goes back to the Civil War, anti-pro-slavery. Yeah, I know. I have a Kansas native sitting, not in the view here, outside the window of what you guys can see, but she's over here.
She's the
giving
one
me
fishing us properties.
Yeah, but yeah, it does go back the old days, right? So that border war thing still exists, though. Like Kansans don't really care for Missourians and vice versa. It's just the way it is, right?
Are there any, is Kansas more or
Kansas
less
isn't a
landlord
landlord friendly, from what I understand. Kansas is landlord friendly as it relates to other states in the union that are for sure not landlord friendly. I would say Kansas lands on the landlord friendly side, but it's not as landlord friendly as Missouri. And it's not as friendly by about 30 days. That's really about the crux of it. Missouri is what we call a non-judicial foreclosure state, which I know foreclosure is not the right term, but the non-judicial part of it is the same thing. So as far as like evictions and that kind of thing, in Kansas, you have one more step in place where it could prolong it by an extra 30 days. So evictions in Missouri are relatively quick. You're anywhere from 30 to 60 days, depending on the contestant of the other side. Whereas in Kansas, just add 30 to 60 days to that if there's contesting on the other side. So what I mean by that is if your tenant shows up with a defense and they contest it and then you're adding some time to it, especially on the Kansas side. If it's a non-contested thing, then they can go out in Kansas almost as quickly as Missouri. Missouri, I would say, is like a 9 out of 10, maybe a 10 out of 10 landlord friendly state. They're like up there with Wyoming and some of the other more landlord friendly states in the union. And I would say Kansas is just right behind that. They're nowhere near like a New York or a California when it comes to their tenant landlord laws. So Kansas, I would say, is not as friendly as Missouri, but both Kansas and Missouri are both more friendly than most of the other states in the country.
One question we have in the chat is about management. So we'll do property management, but before we do, because we're kind of on this topic, do you want to tell them kind of the main areas you focus on, which obviously can vary, but any areas you absolutely don't buy in, just to kind of give them an idea of, like, you know, if they're interested in Kansas City, what I'll say sub-cities, what are the suburbs?
Yeah.
Sub-cities, which ones, you know, can they be researching just to know where your inventory is going to come from?
Yeah, certainly.
Oh yeah, favorite areas and suburbs. Perfect.
Yeah.
That's
so
better phrasing.
So we'll do, there's some certain areas that we won't invest in. We'll kind of go over those, but as a general rule, and this is like, has been expanding, but as a general rule, we'll be about an hour from downtown KC Metro. That is about our geographic footprint. Within that area, there's certainly areas we like best. Over the last, say, year and a half, maybe, I don't know, roughly in there, we've added both Leavenworth and St. Joe into our kind of footprint of areas that we're looking at and investing in. We like those two markets. Those are smaller city markets, sub-markets of Kansas City. But we've we've been able to find deals, and those have been good markets for us. We like the values, we like the rents, all of that stuff.
We went to St. Joe yesterday, so I saw a lot of Joseph.
Yeah,
St. Joseph properties. So St. Joseph is about 45 minutes out of Kansas City, Missouri. And I was asking him, what are the industries up there? There's a lot of solid industry. The downtown little area is really cute. Like I think all the properties we went to were, it was really good areas. Like I really liked St. Joseph. I know people, especially if you're from California or New York, you get a little hesitant about when a town is 45 minutes outside of the big town, but like I'm from Atlanta, everything's 45 minutes outside of Atlanta. There's what's normal for one city is not normal for another. And I would argue St. Joseph is a completely normal, it has enough of a city in and of itself that it doesn't need downtown Kansas City, but it's close enough also in the range of it. And I loved all the it was a great area.
Yeah, there's a lot of nice areas up there. And of course, St. Joe and Leavenworth, you can argue they have some blocks and some parts of town that are a little bit seedy and that kind of thing. We prefer to not be in any of those areas. So we've expanded our footprint. Some of the suburbs that we're kind of always in, obviously Kansas City, Kansas, and Kansas City, Missouri, we're in those cities. We're in Gladstone, we're in Independence, we're in Raytown, Belton, Grandview, to kind of loop our way around. What am I missing? Blue Springs, Oak Grove, which is kind of getting to the kind of stretching our hour outside of town. Anywhere in North Kansas City, like Platte and Clay County. So there's four, I guess five, but four main counties that make up the Kansas City metro area. Well, five. You got Platte County, Clay County, which is the north side of Kansas City metro. You have Jackson County, which makes up most of the eastern side of Kansas City metro, and the Wyandotte County is west, and then Johnson County, which is like south and west. Wyandotte and Johnson are in Kansas, and the other three counties are in Missouri. That 5-county really makes up our whole KC metro area. And we'll be all over there. When we're talking about, like, I guess we're talking really, obviously we're talking rental property, turnkey property to investors. So there's some spaces that we'd love to be in, but the numbers just wouldn't work, right? So we'd love to be all over Overland Park, Olathe, some of the areas where we consider neighborhoods, but we're talking about a 12 cap versus a 10 cap. And some people might say, oh, I don't know about that. But most of these properties are humming around at like a 4 or 5 cap, right? And so we just don't have a very active market of investors who are looking for 5 caps, even though it may be a solidly appreciating asset. And so we don't do a lot of that stuff in some of those areas. If guys came to me and said, hey, I'm your $300,000 buyer for the house that's going to rent for $2,000 a month all day and every day with a high tax rate, we'd go find those houses. But it is what it is. So there's some areas for sure that we'd like to be more in if we could, but we're pretty much dictated. And I really like what's called a B area. C plus works as well, but B areas are really my preference. So C plus to B, those are really my preferred neighborhoods because you have a good blend of what everybody's looking for. We all want a good income stream, right? You're not buying these to not have cash flow. So you got to have a good positive cash flow. But you don't want to sacrifice your sanity and the house and like all of the problems of like really low income neighborhoods where there's a lot of crime and all that. You don't want to sacrifice your paper cash flow, right? On paper cash flow. You don't want to sacrifice that for a neighborhood that is really going to have a hard time cash flowing, right? Because of vandalism and vacancy and whatever else, right? Just low income problems. And so I like that C plus to B asset. Those neighborhoods make the most sense for good positive cash flow, modest appreciation. We're not talking, we're not in California on some. Now, I will say around here, appreciation's gone gangbusters over the last couple of years. But in a normal, let's call it a normal micro, 3, 4, 5% appreciation rate, we're modest, right? Those C plus to B neighborhoods are modest, they're moderately price pointed as well. So for investors that are coming in, you spend a $300,000 house or you buy a $150,000 house, the price point is a lot more moderate for the investor. So the entry level is better. And then also when you have to think about options as an investor, it's always smart to think about options, your exit strategy from this investment. And if you're in a low neighborhood, you maybe do cash flow well, maybe if they do cash flow, but your chances of selling that with any appreciation down the road are going to be pretty small, right? And so it's that C plus, B plus, that kind of area of neighborhood, in my opinion, is probably the best one for a turnkey investor, because you do have moderate cash flow, moderate appreciation, and you also have options, which is to sell maybe to a first-time home buyer, which in a lot of cases are eager. They want to come in, they'll pay your full asking price, so on and so forth, right? So we typically like to play in that, what I call C plus B areas. I mean, all the areas you've seen, we've been in several different cities and neighborhoods, and all of that is all kind of pretty closely together as far as what the demographics, some like would be C versus B, and you can see the difference in that, but they're still going to fit in that. They cash flow, will have moderate appreciation. You know, you're not going to be in a war zone where you're worried about having to board up your windows every time that, you know, it just, we're not going to be in those areas because we're not going to risk our own capital in those areas.
Are there some obvious no zones that you won't touch? There
is. I'm trying to think of the, it's right over there, and I think the zip code is like 64124. It's like, it's really close in between a couple of our really good performing zip codes, which is interesting. They're like 64123. I love that zip code. That's a historic northeast. When you go south of Independence Avenue on that east side over there by the highway, it gets pretty scabby. Like, so I just don't like that area. I don't know the name of the neighborhood, and we'll have to map it, but it's like south of Independence Avenue and east kind of towards the highway, up there in the 64124 zip code. It's not my favorite area to invest. 64126 is also kind of not my favorite area to invest. But I like 64127, right? I like 64128. I like 64130. I like 131, you know? So anyway, I guess I'm rambling a little bit, but there are some areas that I don't like. I don't like those couple of zip codes.
Are there, I got the question on the rehab, so I'm glad you reminded me. We'll talk about the rehabs. Jim says, are there nicer A or B neighborhoods that have seen good appreciation over the last 9 months of market craziness, where rents have also risen a decent amount and almost kept up? In markets I'm following, many nicer areas have outgrown their rents, but there are a few pockets that are particularly high demand and have higher rents that make the numbers work still. Any areas like that here? Or like, I know that happened in Philadelphia. That was a big thing in Philadelphia too. All the prices outran the rents pretty hard.
Yeah. Oh, well, no, that happened here. I guess it didn't outrun the rents. It just changed everyone's expectation of what they should expect when they walk into the Kansas City market.
Mindset,
so
turnkey mindset.
Well, yeah, I mean, like, so we used to sell these things after all said and done at like double-digit cap rates, right? And now we're like, what does this say? 7, right? As far as those areas, I'm not the best one to answer that question. I deal in so much in the investor world, and we don't deal in those high A markets that much. We do some retail stuff, like retail flip stuff, but we're not renting those properties. We're not talking to property managers about them. We could care less what they're renting for or what they rented for 5 years ago. Like, that just doesn't matter when we're dealing in those neighborhoods, because we're just selling it to the market and not to investors. So I am probably not the best one, Jim. I apologize. I'm probably not the best one to answer that question for you. I can tell you that the West Side neighborhood, we showed you the West Side neighborhood today. Remember that little area of the West Side? Yeah. The first one today. That would be one of the neighborhoods in town that I'm talking about.
I told him, I was like, sorry to my folks, because if a property comes available here, they're never going to hear about it because I'm taking it.
Yeah, well, we're buying everything we can in that area too. We're not selling anything over there, right? So like, there are certain pockets and certain like sweet spots that we really have our finger on the pulse of the market and where gentrification is happening. And like every now and then we see a house that's like, golly, okay, well, we're just going to keep that one, you know? So there are some areas that are like that. And really the biggest, I guess maybe the best barometer for what you're talking about, Jim, as far as like what you're saying, these A and, you know, B plus and A markets that they've been appreciating, and are the rents catching up? The way that people are catching up rents on popular areas and neighborhoods where the prices are getting higher is they're doing short-term rentals. That's how they're catching up their rent. So it's not that the base market long-term rent, yes, that's going up. It is. Inflation and everything's going up. Rents are no different. But what they're really doing on places like that and in neighborhoods and areas like that, especially if you're close to town, close to a hospital, close to attractions, it's short-term rental. And they're at least doubling their income on what a long-term rental will give you. So short-term rentals, that's something we do a little bit personally. We don't manage it. We don't really talk about it because we don't sell it. We don't want to start giving people advice on it. Like, and I don't want to overstep on any toes, or Ali, you know, we're talking to you guys really turnkey property, and I don't want to get off into a short-term rental conversation, but yeah, that's an option a lot of folks have been doing for sort of their higher end properties.
Just as an example, a 200K house that still rents for 16 to 1700. That's kind of what we've seen, because a lot of the ones we've seen are going to sell for ballpark like 180 and rent for 1450.
Yeah, we've seen,
like
we've got, well, that one you saw today in Kansas, which, you know, it's already under contract with somebody, the orange door. Yeah.
That's how I know which property I saw is what color the door
Orange
was.
door. Yeah. That's like a 190 house that'll rent for 1,500.
That was on the KCK side.
So yeah, it's very, very similar, Jim, to what you're talking about. We've got potentially another one in that same neighborhood that'll be coming, but we're, you know, it's not closed and done yet. So
let's do, while we're thinking about rents, let's hop into the property management side, because we can come back to the rehab, because the rehab conversation can kind of lead into the turnkey light, and then we'll kind of maybe open it up for all the questions after that, you think?
Yeah.
Maybe just barrel through. So the question was, do you not do the management? So when he's talking about, he's not really on the management side. So just kind of a general turnkey thing is, you know, the question always is the property manager in-house? For some, in my opinion, ungodly reason, everybody always cares about an in-house property manager. My experience of in-house property managers, with the exception of REI Nation and Mid-South, who are notoriously phenomenal at customer service, which is absolutely not the norm for turnkeys. My experience has been that the property management has always been better when it's a third party, because no offense to these provider guys, they're really good at what they do, which is these houses, negotiating, you know, they're flipping, they're in the crux of these houses. That is not the same skill set as running a property management company at all. So I actually get scared away when a turnkey provider says it's an in-house manager. I'm like, oh God. Chances are, most of the time, the only reason there's an in-house manager is because the turnkey provider was under the impression that they need to offer this to people. So they're like, oh, I guess I'll create one. And they're just not good at it. So that's my lead in to say that when he says he's not on the management side, I'll let him give you the details, but they work with a third-party property management company. He's the provider of the properties, and he is connecting you with property managers to manage your property. So like, you know, this is another kind of myth that I want to debunk about turnkeys, is you should never trust the property manager that a provider gives you with a property. Interview other ones. You can pick who you work with. And it drives me up the wall when everyone's like, well, this didn't work. Well, did you interview anybody? No. It's like, stop trusting these guys. Don't. It's, you know, it's not their job. Like what he's talking about, that perfectly wrapped, the ass wiping contest. I was like, I already forgot my favorite phrase is, you know, these are not perfectly wrapped. These are investment properties. He's the delivery guy of the vehicle for your investment. It's up to you as the investor. And this is part of that mindset change that I want to work on, is you create the investment. He gives you the tools for it. You do this. So with that little overly excited intro about the property management, they do work with a third-party property manager, but he even has a couple different options that you can work with. Again, don't take who he says is phenomenal, you know, interview 2 or 3 of them. Oh, we just got a paper delivered on our desk, property management terms.
Yeah.
Thanks.
And we can go over this, but again,
Yeah.
we have some options when it comes to management.
And I just want to
we-
clarify that just because the way that he was saying it, he is a turnkey provider and we're all used to turnkeys coming with management. So when he's saying, I'm not on the management side, and then the question comes in of, wait, you don't do management. Management comes with the properties. That's not his business. He just works with the managers to make sure that they're,
Yeah.
at least vetted,
yeah,
it's somebody he trusts,
we're
that kind
talking
of stuff.
Yeah, we're talking terms, we're talking lease renewal, we're talking, what are your costs, all this stuff. So we're always, we've got managers, that we like to refer to, but again, what Ally's saying is true. We're really good at the property business, but we don't really lease properties that often. Like, we're not leasing specialists. We do lease some of our own properties. We'll lease a property maybe here or there that we'll be selling, but we're not, like, this isn't what we do all day, every day for business. And so we don't necessarily have our finger on the latest pulse of what rent amounts are in certain areas and that kind of thing. We rely heavily on third-party managers to tell us what things are going to rent for. And we're able to make some decisions on, do we even buy this house and that kind of thing. So we, as much as anyone else, we rely on people who lease properties for a living to tell us what the properties are going to rent for. And then those are what the numbers are. But, and different managers have a little bit different ideas. They're never really ever too far off, but we work with a couple of different managers in town. And, we had one the other day and we totally thought reverse. We thought, well, I think this manager probably is going to say a little lower on this one. This manager might say a little higher. It actually worked differently. So we don't know, right? So that's the thing. And I hate to, when somebody says, well, what do you think you're going to rent it for? And if a manager hasn't
I've
told
been
me,
asking him that 2 days in a row.
right. And I'm like, I don't know. I don't know. I need to ask because I don't lease properties. Now I have some experience. I can tell you what some others have leased for. But again, if it's not what I do, it's not my expertise. I really don't feel like being the guy that come out and put my name on that. But I do want to say, hey, I've talked to some property managers and this is sort of the aggregate of the average of what they think they're going to get. We usually give people a range. So anyway, that's that. I don't do management because it's not my personality type. I tried it for a little while just to help some people out. And no, this is a true story.
I'm very excited for it.
Well, I don't even want to get into it really, but let me just put it like this. I've sold a lot of properties over the years and dealt with a lot of different managers, a lot of different people from a lot of different places. We've kind of burnt out managers sometimes over the years because we're maybe overloading them. They weren't able to staff up appropriately, whatever the case may be. But it was been several years ago now, but I had a group of investors come to me and say, Ben, we're just having a hard time with management. Long story short, can you help us out? And so I did a short-term stint to try to help some people kind of get them out of a bad situation, back on their feet, get some properties performing. And then once I did that, they were telling their friends. And next thing you know, I was like, guys, I told you I'm not your manager. But then all of a sudden I had all these doors and I had employees and I had headaches from the time I woke up, from the time I went to sleep. And I just was like, I'm not doing that. And I wasn't able to get any of my work done because I was handling everyone else's problem. Anyway, I don't do management for many reasons, but that probably is the biggest one because I'm just busy doing property stuff. I'm buying and selling, and I don't want to build a whole staff and company of managers when there's already companies that do a great job, right? So what business would I have to go do that? And that's why, again, we don't, when we give a rent projection, it's really a rent. It's not because I could care less. I don't even go out and want to know really what rents are. I want managers to tell me. So anyway, no, we don't do the property management. We'll give you some managers that you can talk to, but it doesn't even matter that you talk and use these managers. You really need to find one that works well for you, that has a good response time, that is good for you, that has a personality type that meshes well with you. It's kind of your part of your due diligence as an investor to make sure that who you're dealing with is who you want to deal with. This old adage of, well, I bought this property and it came with this manager. The guy told me I had to use this manager. Maybe I need to use this manager because what if I don't? And somebody's upset. Like, that's all nonsense. Like, it just is nonsense. I don't know who's feeding that or who's eating that, but in our world, in my world, and when I'm talking to people, I'm saying, no, you should go interview a handful of managers. You should go figure out who works best for you. You should go ask about their fee structures. Like, you need to do this not only to actually know the answers to the questions, but you also need to do it to figure out what kind of relationship, what kind of response time, what kind of, where are you at with this as a long-term relationship? So let's say somebody's having a problem answering a couple, ABC type questions off the beginning. Well, maybe that's not your guy, right? Or maybe someone's so busy that they weren't able to get back to you in a week or 2 weeks or whatever the case is on the management side. Like, I don't know, maybe that's not the right guy either. Does that make sense? So we're not putting our stamp on this house saying this is the manager, this is who it comes with, this is who you need to use, because that's your choice. And who am I to tell you who to use? It needs to be your choice. Now, what I will say is, whoever you use, we'd like to know who they are. We'd like to talk with them. We'd like to let them into the property either before you close or right after you close. We would like to get their feedback based on the house to say, hey, is there anything else that you think we might need to do to this house to make it rentable, to make it be an easier for you to lease the house once your new owner takes over? Like, we want to work with your manager, but we don't want to tell you who that manager is. We want that leverage to be to you. Here's the other part too. We've noticed, and I've just been in this business a while, and this is part of the progression of changing of what Turnkey was and what Turnkey is now. It used to be, we'd put the tenant in, we'd put the manager, we'd do all this and that, and we wouldn't close until there was a tenant in place. Well, I can tell you, and not just for myself, but just knowing other turnkey providers, I can tell you that when you're putting a $100,000 or $200,000 closing on the line just to have a tenant in the place, and that's the only thing standing in the way of, let's say, me and 200 grand, I may have the tendency to just put a heartbeat in there. You understand? I may have the tendency to put a heartbeat in there, if that makes sense to you guys, which is to say, you don't want just a random heartbeat in your house. You want a manager who has vetted that person, who they're the ones that are going to have to build that relationship. So that's the other reason we don't like to tenant properties, because if I give you a tenanted property and I hand you the manager and the tenant and they're paying their rent, you're probably never even going to talk to your property manager, which, why would you? So it doesn't force the relationship. So the other reason I like to sell vacant properties and give you your choice of manager and have you guys be the ones that lease the properties is because it forces the relationship with you and your manager. It forces the relationship with your manager and your tenant. Those are very key relationships, especially the one with the tenant and the manager. Like, that's a key relationship. So if I put that tenant in, they may be the best tenant on earth, but then some manager takes over right behind me. And this is not every time, but it has the ability to have slippage in between there where the tenant and the manager just don't get along. And that manager is a prick and the tenant's not giving an inch, and your house just blew up and it cost you $10,000 in bullshit, right? Because the manager and the tenant hadn't previously developed the relationship.
It's like he's speaking from experience or something.
Yeah, well, you guys might think it's funny if you haven't heard this, but I mean, this is a true
Yeah,
scenario. It happens all the time. And so I like to force the owner and manager relationship. Like, that's your relationship, not mine. So develop it. I like to force the manager-tenant relationship. That happens through screening, through placement, through lease signing. Like, that's their relationship, not mine. They need to do that, right? And so when I first was doing this a couple of years ago, and I was saying, hey, I'm not leasing properties, I'm not waiting for a tenant in place to close, I'm not a manager, and I'm sort of releasing some of the turnkey stuff that everybody was doing. And I was kind of saying, nope, I'm not doing it. I'm switching gears. This is how I'm doing it now. I got a lot of not nice things said to me, but mostly along the lines of like, well, Ben, you're just being lazy. And it's like, well, wait a second. I'm actually not being lazy. I'm actually doing what I feel like is the best thing for everyone involved here. I feel like this is better for the client. I feel like it's better for the property manager. I feel like it's better for the tenant. Like, I feel like it's better for everyone involved. Anyway, so
Well,
that's,
and with that said too, because if you're brand new or you're like, oh my God, I'm just going to be off on my own to find a property manager, that's not the case either. So swinging the pendulum a little bit, there is a group, this is who the terms are for. So like, if you insist on being a hands-off, let's say you want to buy one of Ben's properties and you don't want to put any ounce of due diligence in anything, or you don't want to develop all those relationships, I don't condone it, but okay, you can still buy a property and Ben's gonna be like, well, I've had good luck with this property management company. So he has one particular property management company that most of his people use, I believe is accurate, but there's also some alternatives.
Yeah.
And he can give you some names, and someone is asking if you're willing to share, if any of those managers do take other properties. She's got some properties there that I don't know if you want to share details of the main property manager. So you're not on your own. Like, we're here to help you. They can give you recommendations. The property can come with a manager pretty brainlessly. I'm with Ben, where it's one of my sticking points now is I don't know how else to beg everyone to do due diligence and find a manager you like, because everyone keeps going with the manager who comes with properties. So I'm not a fan of that. But with that said, there is the brainless version of this where you can just go with this group, be done with it, and whatnot. So Ben does, it's not like he's just selling you the property and kicking you to the curb. He can set you up with that company, help with communications, all that kind of stuff.
Yeah, we've developed some relationships with managers and all that. And again, like one manager who's rock star stellar right now this year, they may have some trouble next year, right? So we kind of have to keep our finger on the pulse, and we like to be talking to managers. And we found a manager recently who has a flat rate. I mean, every management company is different, right?
Mm-hmm.
So it's like we like to have a couple tools in the tool bag. We don't ever like to put our eggs in one basket. We like to kind of have a few options for people. That being said, we do have a manager that we've referred, I guess the majority of the clients, I'd say at least in the past 12 months to, 8% management fee on what's collected, and kind of reasonable.
You said they're a big national company, right?
They're a big firm. They're a
That's
big
another thing I want
firm.
to think about. Do
So
you feel better? Some people feel better with big national.
some people like the big firm.
Systematized firms. Some people want mom and pop where you call the guy's cell phone, straight
yeah,
away.
again, so it's a really, that's a key relationship, I feel like, between the manager and the tenant and the manager and the owner. We like to have relationships with managers as well, because we like them to be quick and honest with us on rent assessments and all of this kind of stuff. And we like to have sometimes where we have to manage a manager. Like we have groups of properties that we've given to certain managers. Like, we like to walk back behind them and say, hey, how are you doing? Here's a list of stuff that we had given you. How you doing with this?
Mhm.
Even though we don't own the property anymore, and technically, you could tell us to take a hike, but they're not going to. We give them a lot of business. So we want to have some relationships with the managers. So
Well,
in
and
the
don't forget,
cases,
Ben's got, and every provider has a very vested interest in the management being good, because the management gives him the number to put on this pro forma of, it's going to rent for $1,100 a month. Well, guess who is going to look bad if it rents for $800 a month? When it was the manager's fault. Everyone's gonna blame Ben for it. And the management is what's gonna keep you guys coming back. Because you could buy the best property in the world, and if it's managed terrible and everything just blows up sky high, you're never gonna want to buy from Ben again, even though that was the manager's fault in that case. So Ben does have a vested interest, and he's not just sending you to some manager. And like he's saying, he's going to have a relationship with that manager, because it in turn helps him back. But so there is a separation there, but there is still a relationship between the two of them.
Yeah, we're not like wanting to manage managers. That's not the name of it either, but we also have a vested interest in everyone winning.
Yeah.
And so if the manager's not having like problems with clients, sometimes we hear about that. If clients are having problems with managers, we hear about that. Every now and then we'll even hear about tenant issues that are sort of working their way into us, right? So it's like, it's one of those things. Everybody needs to just be getting what they came for, right? The expectations need to be met. So managers have to do their thing. Clients, you guys got to do your thing, but always need to understand that, like, I'm over here in the background wanting everyone to succeed. And so if Jim, if you're having a problem with something, we want to know about it, right? So at least we can, on your behalf, try to talk about it. It's not to say that we can even fix your problem, but at the very least we can interject and maybe come up with some sort of a solution. and really the bottom line is that we're just not leaving you out there to deal with it all yourself. We've had, and still do to this day, many times where clients will, hey, you know, I bought a property from you 2 or 3 years ago. Everything's been great, but you know, I have this vacancy and I have a turnout cost from the manager and their scope and estimate and all that. And I just want you to go by the house and just look at it. Like, just let me know, just be my eyes. I'm not there. I just want to know if this is like legitimate and is the price fair and all that. And cool. Like, we're really happy to do that for you guys. We want to be able to do that stuff actually, because we need to keep our finger on the pulse of the managers a little bit too. Like, we need to understand if they're doing a good job for you or not. Like, that feedback's important to us. So
I think with that said, there's a couple, oh, sorry, I didn't mean to cut you off.
Yeah, no, go ahead.
There's a couple quick questions we can go through, and then we can talk briefly about the rehabs, talk about turnkey light. I want to open it. I want to give everyone time to answer questions. So how long have you been rehabbing and selling turnkeys? How many properties per year, per month? That's fluctuated over the years, but what's your general, I mean, it's kind of track record?
Fluctuated over the years. So like the early, like, again, this was like gangbuster days back when we were buying stuff and selling stuff to, like, it seemed like everyone everywhere but here, like all you Americans weren't buying. So, but everyone else was, like, really, really heavily.
What year was that? 2000?
2010, 11, and 12.
That's when
like,
you started?
Yeah.
Okay.
Well, 2010, right, is when I started it. But that time period of 10, 11, 12, and even 13, I guess 14 is when it started to kind of, the Americans started making their way back into the scene. I mean, the local guy has always been buying because he was crushing it at the courthouse steps when everything was super cheap. So, but I guess out of state investing, you know, that, like, everyone was like, hey, no, nobody's buying anything, right? But those days were actually not bad for us. We went in when the market was weak and everyone was running and away from the market, and I was like ignorantly running right towards the market, but I didn't know any better and I didn't care either. So sometimes when you don't know the word no, you just go and it all works. So anyway,
yearly number of deals on average.
So we were doing there was a 3-year period where we did all the math and the numbers, and I think it was like 11 to 14, those 3, or I'm sorry, 11, 12, and 13, those 3 years, we did 27 houses a month.
27 a month.
Bought and sold.
Yeah.
Right. So that was like crazy lifestyle, hated it, like, seriously. So I actually left that, started doing my own thing in 14 and 15. I kind of strayed away from turnkey for a little bit. I've been doing it back again, I guess, again for what, maybe 2 years or so. I never left it fully, right? Right now we don't do a lot. We're not a huge provider. We do, 3, 4, 5 closings a month.
He decided he wanted his weekends for himself, like not working 24/7 all day, every day, because it tends to make a person crazy.
Yeah. So and that's just, so there's a lot of that, right? Some of it has to do personally with me, and some of it has to do with the market, but most of it is just like, I'm pretty comfortable doing what I'm doing. I used to be spread out all over the place, different cities, different things. When you're managing transactions and closing and doing all that for 27 deals a month, and that has nothing to do with all the rest of the business stuff that takes place. It's just like madhouse. And I didn't really, when I look back at that, I don't even know, like, I must have been literally crazy. Right. But, so no, we do a handful now. Some of it's turnkey. Some of it's like retail, just MLS, just sell to the market. Every now and then we'll actually sell something, what I call wholesale or distressed. Like, we sell a fully distressed asset that needs a $40,000 or $50,000 rehab, something that's not able to be occupied right now. We'll sell that sometimes too.
Not to you guys, unless you for some reason want it. That's separate buyer pool.
Yeah, no, that's like the local cash guy who's got rehab crews. Like, we're not,
you're like, geez, I know turnkeys have gotten rough, but that's kind of crazy.
Yeah, no, we're not doing that. We're also, we do license agent activities sometimes as well, right? So we'll actually like work for other people. We don't do much on the buyer's agent stuff because that's crazy.
Oh.
Forget it. But we will list properties. we'll list properties from time to time.
For the turnkeys, what are the general price ranges for, maybe call it the Bs and the Cs? Obviously, it's going to vary, but what are your general price ranges?
100 to 200.
Does that cover both B and C?
Yeah.
Okay.
Generally speaking, we're between like 100 and 200, and it might be like every now and then a little below that, which, and every now and then a little bit higher than that. Generally speaking, 100 to 200,000 values.
And then Jim, for your question, we haven't gotten that far yet. Right now, it's just gonna be first come, first serve. So my plan is as fast as I can start kind of putting some properties in front of you guys. So just like it's been with Birmingham, at some point we may do a waiting list. If you guys, well, I'll tell you this at the end of the whatever. Well, I'll tell it to you now, but I'll remind you later. One thing about Ben's group that's different than, say, the Birmingham provider and some of the other ones is they have a lot of systems going on here. So I've never been able to do this with another provider, but if you guys want to get on their mailing list, so you'll see properties come through on my end, like I'll post in the Facebook group or wherever, but also you can be on their mailing list. So when this is all over, I'm sure you guys probably know my email address, but I'll type it in the chat. Just email me with your interest, because what I've been doing is if you email me and say, I'm interested in Kansas City or I'm interested in Birmingham, I'm saving I'm very manual at this point. I'm not good at this whole system automation thing, but I have a manual list of when I get a property, I email it out to everyone. So I'm kind of creating mailing lists. So basically right now, first come, first serve is going to be how they'll work. We may adjust that as it goes, but you can also get on their mailing list, which I've not had from another provider to offer. So just plan to email me after this and, let me know what you're interested in. If you guys know, like, hey, I definitely want a B asset, here's my price range, like give me specifics on what you're interested in, because then if I see something that fits that, I'll email you specifically about that one. But I'll keep you guys posted, because I've got to get home and let my brain settle to kind of figure out how we're going to work all of this. But the last quick topic of conversation, and then we'll just open up the floor if you guys have anything left, is I'll let Ben tell you a little bit about their rehab quality, what they do, and then we'll tell you about the turnkey light option that it sounds like enough people are interested in that we have a property right now that I'm gonna try and gather all the information and put in the group for you guys to see that would be able to be purchased as a turnkey light. So I'll let him tell you with the full turnkey rehabs and then what the light version of it would be.
Yeah. All right, cool. So thank you, Allie. The turnkey property, like this is what we call, and it's to us, it's no different than like anything we do for a retail sale or MLS sale for that matter. So we're going to go in and do full cosmetic updates. We replace old windows. Roofs have to be less than 10 years old. HVACs and water heaters have to have at least 50% of their expected life left in them. So that's what we kind of call full turnkey. And that includes cosmetic rehabs, flooring, paint, cabinetry, countertops, light fixtures, plumbing fixtures, like everything's matching, right? So if it's like you have white sink with a black faucet, then you would have like white doors with black handles, right, on your door. So kind of all of that, when you're classic turnkey, right? And you guys have probably been around long enough and seen, enough of what turnkey property rehabbed, mechanically, plumbing, electrically, roof, structurally, everything, up to code, inspected, foundation is solid, like all of that stuff that you would expect anyway with a house, right? And then on top of that is all your full cosmetic finished packages, right? So that's what we call like a retail, I call it a retail sale, turnkey sale, retail sale. And then what we've sort of coined as turnkey light, in my mind, I called it the as is rental, but that wasn't the right perception. And so turnkey light, or maybe like off market, maybe you've heard the term off market property, like these are, so turnkey light are the other option for what we're able to offer to those who are interested.
And this is specifically why I think people should really pay attention to this, is because interest rates are getting higher. The cash flow is getting squeezed because of the interest rates. This is a way to get any level of asset, but in the case of the property yesterday that I will be able to show you, it's a high-end asset. Like it's more of a A- neighborhood, you know, big house. So this is a way to get a higher class asset for cheaper, and or keep your interest rates down right now, but basically have a cheaper option with all of the function of turnkey. So that's, I think everyone should be thinking about this. And it does go back to that mindset conversation about the turnkey is, like Ben said, since the beginning of time, people have bought successful rental properties that are not perfectly upgraded. They're not perfectly pretty. They're not all of this. And this turnkey mindset has been, oh, you have to have this perfectly pretty and upgraded property. Well, guess what? You don't. And so if you get one that is not perfectly pretty, but it's perfectly functional and rentable, because like the as-is property, you can buy an as-is property that, like he was saying, it's not inhabitable. It's not safe to walk in. If someone tries to sell you an as-is property, quite often that's very risky and dangerous because you don't know what function it is. So that's why I didn't want him to call it as is. So this turnkey light thing is, you're getting all of the function. There's no immediate CapEx repairs expected, no major repairs expected right away. All of the bones of the idea are there. It's just maybe not as pretty. So it's good carpet. It just might be red carpet, or it's great countertops, but it's from the 90s. How far is the 90s? I was about to say the 90s. That's like 20 years ago. But, you know, so it's not the most upgraded, fresh, new, modern look, but there's literally nothing wrong with it. So, you know, this is, in my mind, and we were kind of talking about this, you know, turnkeys, as you've noticed, it's getting harder and harder. There's fewer providers, fewer properties, cash flow is squeezed. So what if you can get the same cash flow on something that you can improve over time or on your own, and you get to keep all of that appreciation later? So I think it's phenomenal. And he asked kind of what I thought about it in terms of like, is this something you guys would be interested in? And my answer was, well, yes, but then you guys kind of validated it in the group. So I think it's something that could be of huge value.
So we've been talking about this a little bit, and we've actually sold, you know, a handful of properties, you know, different single families or duplex or whatever that are what I call turnkey. You know, we're calling it turnkey light, but essentially what she said. So, and I've been in the rental property business for a long time. I've owned a lot of properties myself. So what we're talking about then is like, you guys are accustomed to a turnkey property that's been fully rehabbed, it's granite countertop, or, you know, new cabinetry, but, you know, all new stuff. And what I talked to her about yesterday, I said, you know, we sometimes come across inventory that like is just what I call a standard rental property. Like it's been rented for a while, cosmetically, it's dated, but the electric works. The plumbing has been updated recently. It's got really great mechanical systems like HVAC, furnace, all that. Like it's got everything that you need. Everything's up to code. Everything works. It's got a serviceable roof and conditions. And maybe the windows are older, right? The older wood windows and not the brand new vinyl windows, right? And so when we look at something like this, it's like, well, somebody will still rent that property, right? It's still a very, very good rentable asset. And most of the time people have been renting those properties. That's like a rental property. That's kind of what you expect in the normal world of rentals, right? But what we've been doing a long time has been doing these freshly updated rehabs, which the reason we do that is because we're looking for above average rent, above average values, above average rent values, and maybe above average intrinsic values as compared to other rental properties, right? And so here's a really good example. And this, like, I can talk for a long time, but let's just like cut down to it. The property we just showed you, like this one right here, that's the before renovation picture. Does that house look functional and livable and like it's not falling over? There's nothing, the roof is in really good shape. The gutters are in great shape. The siding's in great shape. It already has the electrical service upgraded. It already has the plumbing upgraded. And I'm just showing them the picture. But so here's the thing. Okay, so this house now is a 125 house. We just dropped a $40,000 rehab on it. Okay. Well, we're asking for market rate for this house based on what it is, right? Based on what we've done to the rehab. We could have sold this house without really doing a rehab and just cleaned it up because there was a tenant literally that walked out this door and my construction guys walked in. We could have sold this house without doing or hardly anything and probably sold it for like 75 or 80, right? Or 90, somewhere in there.
To you guys.
To anyone. Right. Yeah, but to
Yeah.
anyone. Now, we have $1,000 rent projection. If we hadn't have done the updates, we probably would have an $800 rent projection, right? And so if you run the scenario down through your cash flow and pro forma or whatever you guys are using to size up your deals, you would probably see that 800 rent and $80,000 purchase price was going to be just as good, if not better, from a cash flow and performance standpoint than the $120,000 or $125,000 with $1,000 a month rent, right? And so the question that I posed to Allie, and we've kind of been doing this a little while, working with a few other people who are like, yes, please give us these, is like, hey, why don't we just start selling what I call turnkey light, or like what I said, the typical sort of rental property. Like, would your investors be open to something like that?
Normal
Like,
rental property.
yeah, like, would you be open to saying, hey, this property here today, we haven't done all the finishes. It's dated from the 90s, but it's clean, it's functional, it's up to code. There's not any major things to do, but we just like, yeah, you can go do the $30,000 rehab and just cosmetically update the whole thing. But do you need to do that for occupancy? No. So if occupancy today means maybe touch up paint and just a cleanup, then, and we can sell that price for significantly lower than what we could sell the fully rehabbed one that we've spent all kinds of time and money on. And your cap rate and your rent and your return is going to be about the same. Like, I don't know, you guys have to tell us, is that something that you'd be interested in? Right. So if like,
right. And while he's talking, write in if it's something you're interested in, and write in any specific questions you have about that, because we can kind of keep those going while he's talking. And he probably said it and I said it too, but just to reemphasize, like, for instance, if the hot water heater is really old, they will fix that. So it is, this is not an expectation of you suddenly having CapEx. It's the same from the turnkey front on that. If there's a broken window, while they may not replace all the windows to the new stuff, they'll replace the broken window. So it is getting it rentable, clean, fully functional.
Yeah. Yeah. So that's kind of the thing. And it's like, well, we have a property, we come across them quite often actually, where it's like, hey, this is a good rentable. This one that we showed you on Grand is a perfect example, because I mean, we literally waited to close until the previous owner's tenant moved out. Like, they moved out, we closed, the guys walked in right behind them. She left the place, broom swept clean, wiped down, all the lights worked, somebody could have moved right in after her. Right. And so our plan was already rehab the house and this and this and this. But if somebody would have stepped up and said, hey, I'll take that house right now for 80,000, don't do anything to it, it's livable, I'll take it. You've updated the majors, the roof's in good shape, the gutters are good, my foundation's solid. Yes, I can go do the cosmetics and the paint and whatnot down the road. Like, if we had somebody standing in line saying, I want that asset, then we would have never rehabbed it. Right. So for us, it's like, we want to be able to provide as many properties as we can. We want to be able to help investors get into deals. But if we're doing full knockdown, drag out rehabs on every one, it limits our ability to do business, right? And it also we're pressing the market as much as anyone. If we're selling what I call turnkey light, or like this, functional rental property, we're not pressing the market. We're selling that for the today's value of what that asset is worth in its outdated condition. And there's plenty of houses that sell, by the way, to homeowners. We see it all the time. We run comps nonstop. We always see dated properties being sold for way more than what we think they should be sold for, to owner occupants, right? Owner occupant sales with their VA loan or whatever, conventional mortgage. We see it happening all the time. And we also know that it just traditionally, and even today, smart investors are buying these rental properties for less than the full blown out retail rehab price, and they're cash flowing really well, and they're pocketing that future appreciation potential themselves. And they're the ones that on their time, and they can say, hey, I'm going to rehab the bathroom between this next tenant. Between the next tenant after that, I'm going to put new flooring in. Between the next tenant after that, I'm going to update the kitchen, So over the course of some tenants and over the course of some cash flow, and obviously over the course of debt service reduction, principal reduction rather, I'm sorry, and appreciation of the market, you're getting a spread on your property the whole time you're doing this. And so to me as an investor, again, and I'm just doing this and I just speak plain English, it makes a lot of sense for me to be able to offer this. And if I'm buying for rentals, it makes a lot of sense to be able to buy a functional, strong asset that's, and again, we're not selling these as is, like take it or leave it, walk away. You still have the ability to appraise. You still have the ability to inspect. You still have the ability to come in with your conventional 20% down loan, right? Like all of that stuff you can still do. And whatever repairs, reasonable, whatever safety issues, we come together and we work that out and we figure that out together. But it's the difference between, you know, paying $150 for an asset or paying $250 for an asset. And the cash flow maybe be very, very similar between those two assets. So again, it's just something that we've talked about. We've offered it to some other investors in the past, similar type asset, the turnkey light or the functional rental property. And Ali thought that, you know, it made some sense and wanted to talk to you guys about that.
So Anton, your question is fantastic. And I was going to jump in kind of with this answer. You said, would the plan be to fix it slowly over time, rehab it prior to exit, just trying to get a sense of the long-term strategy. So as I've been thinking about this, in my mind, there's three options for what you can do. You can buy it as it comes and never do anything to it. You can keep renting it out and you can sell it, not upgraded. Because like you said, properties sell less than upgraded all the time. Again, this is this kind of new mindset. Turnkey buyers are like, oh, things still work when it's not freshly upgraded. So you can buy it and do nothing with it forever because it is functional. It's not like you have to fix anything. So that's one option. The second option is you can absolutely do the full rehab at one time, whether that is early in the game because you want to get better tenants or higher rents, or right before you sell. So you can do a full rehab at once, or kind of like what you were suggesting is you can fix it up over time. I have a property local to me in LA that between every tenant, there's one unit kind of came, nothing really needed to be done to it, but the front unit, before this current tenant that I have in there, we remodeled the bathroom. And then the plan after this tenant was to fix the old floors. Fortunately for us, the refrigerator sprung a big leak and we're about to get free floors, less the insurance deductible. We're getting a whole new kitchen. It's very exciting. So, you know, my plan with that property has been between tenants or every couple tenants or whatever, because this is a long-term asset. Call it 30 years. I have 30 years to do whatever upgrades I want. When I upgrade the kitchen, I can ask more in rent. When I upgrade the bathroom, I can ask more in rent. So it's like a step ladder type of thing. If you want to spread it out over time, also remembering you're writing all of that off. This is all, you know, tax deductible stuff you're doing. Well, repairs versus improvements, whatever. But so
we are
those
not CPAs.
We are not CPAs. We are not.
Don't consult us for your tax advice.
I would definitely not do that. So that's my mind is you can buy it as it comes, never do a thing. You can do it as a step ladder over time, or you can do it all at once. You can kind of become your own turnkey provider at that point. And then Tyler was asking, when you have a better chance of getting better tenants and a fully rehabbed property at the higher rent rather than turnkey light with lower rent. So the answer to that is yes, but what you're looking at, so like what you're looking at, kind of Ben said this before, let's come up with fake numbers. So this property that I'm going to put in front of you, don't quote me on this because these numbers may change, but let's say the turnkey light version is you're going to pay $120,000 for it. If you get it fully turnkey, you're going to pay $190,000. Let's say at the fully turnkey with it all upgraded, it could rent for, I don't know, $1,400-$1,500 versus 1,000,
1,100.
So yeah, you're getting lower rents, but that's what you're looking at is what does that cash flow translate to? So if your only concern is tenant quality, yes, you can focus on the fully rehab things with the higher rents, but also, you know, it's a conversation with the property manager because they may be able to tell you if you go in and say, hey, I have this property, if it's fully upgraded renting for $1,500 or in the condition is now renting for $1,100 or $1,000, is there going to be a big difference in tenants? I would think that answer is going to range. One street, it may not get you any different tenant. Other streets, it may make all the world of difference. So those are conversations you want to have with your manager, and you want to see, is the tenant quality going to be drastically different? And what are the cash flow numbers? Because like Ben said, the cash flow might actually be higher on the cheaper property with the lower rent versus the more expensive property with a higher rent. So those are the things you want to look at. So, I mean, the answer to your question is, yeah, you're probably going to get higher quality tenants, but how bad are the lower ones going to be? And what's that money differential? What percentage of properties do you expect to offer that are turnkey versus turnkey light?
I mean, that's a good question. You know, we're a provider that sort of is flexible on the demands of kind of what is being presented to us.
One thing we talked about was, like, for instance, this property that I'll show you guys that he could sell you turnkey light, because his turnkeys are selling, they're going under contract pre-rehab anyways, or at some point during the rehab. So basically, like, if they're before he, like, if he assumes he's going to rehab a property to go turnkey, there is a period of time where he can't get to it yet. So in that period of time, we could say, hey, before he starts all this work, do you want to buy it turnkey light? And if you say yes, then you just saved him a whole heck of a lot of work to do this rehab. And he goes, sweet, because he gets to offload it faster. It's way less work for him. Yeah. But then if it doesn't sell turnkey light, or if there's some other reason to do it turnkey. So it's kind of, I think, in my opinion, it's gonna be kind of a fluid thing where almost, I don't know if this is accurate, if almost like the majority of properties could be offered light first. Give, you know, I don't want to make a formal statement out of that, but technically they could be offered light because it's not like you have to make a decision right away, you know? So
yeah, a lot of them, I mean, some of them we know going into it, like, yeah, this is the predefined exit strategy. Sometimes we know that right away. There are, and again, it's, so what I say is I'm pretty fluid and flexible based on the demands. We're supply and demand driven company, just like others. So if all of you guys say to me, like, hey, we more prefer seeing the turnkey light, then, and that's the message that I'm getting, then we'll be providing more turnkey light.
I mean, just think, if all of you guys ever only want turnkey light from here on out, his job gets way easier. And then that's all we ever have to sell.
We can, yeah. So for us, it's, again, yeah, we're happy to do that. I think it's a smart move for people to get this turnkey light. Actually, I think it's smart. I think it makes more sense, really makes more sense for investors, because it leaves the spread, it leaves the opportunity open, it leaves the options open for the investor. So I'm just a guy who likes options. So there's that. But yeah, we can provide, you know, we could technically provide more turnkey light and a lot more of it and a lot faster. For one, if we're able to not have to put a lot of time into energy into doing the rehabs and that extra money and the interest and holding costs and all that. So we have to price things out. Like, obviously we have to price things out to make a profit, but there's a lot of like time, money, energy, extras. There's a lot of stuff that goes into that whole turnkey, like a full blown rehab. It's not just, let's go to Walmart and buy a rehab. Like, it takes a lot of work, right? And so I have to sort of have like a reasonable return for the company based on the amount of work that's put into it. If the amount of work that I'm able to put into it is significantly less, then also the return for the company can also be significantly less. And so we can maybe move more properties. We don't expect to maybe make the same margins on those, but that's fine because we're doing a lot less work. So for me, whatever's fair is like, if it's commensurate with the amount of work that I'm putting in, then it needs to be commensurate on the back end, right? So that's like how I see business as being fair in one sense. And so if we're not having to do a ton of work and we're not having to go gut and rehab every house, then yeah, obviously the prices are going to be a lot more reasonable. They're going to be, you know, we've sold some of these, what we call turnkey light, right? We've sold a few of them already recently. And I think of the few that we've sold, they've all come in over appraisal, like, which means the appraisal came in higher than the price that we're selling it for. Like, that doesn't happen that often. We see it happen sometimes in the turnkey world and all that kind of stuff, but it doesn't happen that often. And we don't have appraisals really coming below market or below our ask very often either, right? But it's like, so we were kind of surprised in the beginning. We're like, hey, well, no, look, hey, this property has not been updated for 40 years, but it's super clean. Like, the guy lived there. He never did anything, but he lived there his whole life. He was a meticulous cleaner, right? But his carpet's 20 years old. But so what? It looks brand new. Well, the furnaces are completely dated. Yes, so what? But it's rentable. Hey, but there's wallpaper all over the place. Yes, so what? But did you see how many people want to rent this house right now? right? So it's like, okay, cool. Do we go drop a 30 grand rehab on something that's like a really, really strong sound asset that people are lining up to rent? Or do we just like rent that and give that to an investor at today's price and let them capture the upside? There's been some investors that have actually said, no, I prefer to buy what you call turnkey light. That's actually what I want. And I want to be the one to make those decisions over time. I want to be able to one to capture that upside over time. And so some of our people are kind of exclusively like, no, just give us that dated stuff.
One thing I feel like maybe we didn't mention too, is that it's one thing like, this property that, we're showing you a picture of, that could go turnkey light. But if he does the full rehab turnkey, you're still going to cash flow on, it's still a perfectly normal cash flowing turnkey property. But the turnkey light option, because we drove by a house yesterday that he recently sold as a turnkey light. And it was such a nice property with so much appreciation potential that if he rehabbed it and made it turnkey, it would no longer cash flow to you. So I feel like we kind of forgot to leave that category of this out, is you can do it with the normal turnkeys. So basically you end up with a turnkey for cheaper and whatever. But also this does open up the door for the higher end assets that would never cash flow as a turnkey. So this property we saw yesterday, it was right across from literally this gigantic fancy park development. So the park's not even done yet. There were huge houses everywhere. This was a class of neighborhood that you would never be able to buy a cash flowing turnkey in, period. And so when they were able to sell it as is, or like there I went, turnkey light, they were able to sell it for cheaper in a way that it does cash flow for the investor. And it was very minimal, guy kept it for, it was meticulously cleaned, all of that.
Yeah.
So it does also get you into properties with way higher appreciation potential than you might normally see on a turnkey. So it's not even just the ability for the turnkey level of improvements that you get to keep that appreciation. It may go far past that, depending on what the property is. So now we're talking A properties, high-end properties that would never cash flow, turnkey, that kind of thing. So it's not a just one size fits all. There's a lot of different properties that you could do this with, and you never would be able to buy them turnkey for it to make any sense.
Yeah, that's a good point. I didn't really even think about that, but you're right. If we gone and like fully rehab that house, we probably would have got a little higher rent, but the full market price for that house and like the actual market rent, probably the gap, there would have been a gap there.
Yeah.
That would have been a bigger gap than what the current rent and the current today's value.
Yeah.
Right. And again, we would have taken all the upside off the table for the next person. And I think that's probably the biggest thing when you guys are really like really evaluating this, is not so much what's my cash flow today on turnkey light versus turnkey. What I think the real evaluation is like, where would I maybe want to capture that equity potential myself?
Yeah.
Like that's the question you should probably ask yourself, because the numbers are going to be very similar, like cash flow wise. And, you're obviously going to put less money down out of your pocket, like 20% of a lower number is a lower number, right? So like there's that. But I think at the end of the day, the question you probably should ask yourself in this appreciating market, like in this environment where probably interest rates might go up in the future, like in this environment where we know property values and inflation and the price of everything's going up, does it make more sense for you to kind of lock yourself in at a lower purchase price and have the upside to be able to do those future repairs and updates yourself? And then later on, when the interest rate's right, when the equity spread's right, when everything lines up for you to refinance all your cash out, like, do you see what I mean? So that's really the question. It's not so much, do I want to buy an $80,000 property or $120,000 property? And do I want it like, is it okay, livable, cool, rent ready? Or like rent ready rental. There you go. Yeah. Rent ready rental versus turnkey rental. Maybe that's the, but that's, so the answer then, am I cool with it being rent ready? Am I cool to get a tenant in here today and cash flow at a little lower price, a little lower rent, probably the same return on investment, right? Or similar. And would I be the one that wanted to increase and do my equity potential and my growth and capture that myself? Or am I be the one that let's just buy it completely rehab done at market value, what today's market will be, and then let appreciation do its thing.
Because when you do that, when you buy the fully renovated turnkey and there's no way left to improve it, the only thing that you have to get appreciation with is the market. You have to wait until the market itself appreciates your house for you. That's kind of standard with turnkey. That's what happened with my turnkeys is Atlanta appreciated. So my house appreciated. I didn't do anything to the houses. And so with this, like he's saying, you now are in control of the appreciation, the equity, all that kind of stuff. And boy, I had a fleeting thought.
Yeah.
I lost it. But I think it depends a lot on the composition of the neighborhood and the street. I don't want a property that's overdeveloped and hard to rent for that price, but I also don't want a turnkey light home in a neighborhood full of updated homes. That was my fleeting thought is,
Yeah.
so remember.
So I would want that home, actually.
I would want that home
I
too.
would want what you call turnkey light or whatever. I would want the outdated home in a neighborhood full of
would too.
updated homes.
I would want the worst.
That's
house
actually the
there.
one I want.
Yeah.
Yeah.
And also remember too, turnkeys are more of the exception on a street. So if you look at a whole street, I'm thinking of the street that this property was on yesterday.
Yeah.
If you're looking at a whole street of pretty decent houses, they're not all freshly rehab. They're not all turnkey. Most of them are probably not. More houses, I think, are not updated.
Yeah, they've been
updated.
lived in for a long time
Yeah,
with
so
owners.
I would want the house on the neighborhood with all turnkey, and mine's the lesser because those pull my value up. But I think the reality too, though, is that most houses aren't that updated. So yeah, it is the composition of the neighborhood because you also can't improve. You can only improve a house so much because then you cap out. That's why you can't flip in just any market because you can't ask way more than market and overdevelop a house. You also don't want to overdevelop or over rehab it for renters. If you're in like a C- neighborhood and you're putting granite countertops and like stainless steel, like that's not going to work. You want to speak to who you're trying to rent to or who you're trying to sell to, that kind of stuff.
Yeah, I think it's really, again, it's an option. Not everyone is obviously going to feel the same way about everything for anything, but I think for those who maybe want the idea of being able to buy a rent ready, good solid condition home at maybe less than that full retail turnkey price, and then the ability to kind of do those repairs as you see fit and create your own appreciation, then yeah, it's a great fit for you if that's sort of your personality type or what you'd be interested in.
Just a couple of quick things here, and then I want to open up to you guys because I don't want to keep you here all night. Also is Jim, you make a good point about like sounding kind of murky and uncertain. So just to be very clear, you would absolutely hands down know what you're getting. You're still going to get a full inspection. You're still going to get confirmation of everything working. You're going to have pictures. It's really just a difference of, do you pull out the dark red, high quality carpet from the 70s and replace it with LVP flooring? So you're going to know everything about the condition. You're going to have the full inspection. You're going to have the full appraisal. So nowhere in this are you ever going to not know what you're getting, just to be very clear on that, because what you're talking about is the as-is properties and God bless Roofstock, but at one point they were selling as-is properties and people weren't understanding that term. So if you buy an as-is property, as the way people label it, you have no idea what's going on in that house. And that's the risk that you take. So you might get this house and the foundation's crumbled or the hot water heater blows up on day 2 or whatever, what have you. So that's the as-is properties. And that is absolutely not what we're talking about here. This is just a matter of, do we replace that carpet with LVP? Do we replace that good countertop with granite countertop? The answer is no. So it's outdated, but it's not dysfunctional. There's all the inspections, all that kind of stuff. And then.
So Jim, I just wanted to say that I appreciate what you said, Jim, just now, the expression that it might seem a little murky about what you're getting, or is that like, so just first of all,
if I can, it's quicker.
Yeah.
To type. So I was talking more about the analysis of like whether to actually buy a property. In other words, when you're presenting a property to us, knowing, it kind of just adds one more variable of like, well, would it work this way versus that way? I just like to see a list of like, yeah, this is a property that's going to be a full rehab. And this is a property that we think, we're going to replace the furnace and that's all it needs. And, just kind of, if you put a house in front of us and now we have to decide, now we have to do like this extra level of analysis. That
makes sense.
We'll make that actually good feedback for me.
Yeah, no.
To know, like, if I present it to you guys, to not give maybe both options, to say, hey, I have a turnkey light available. End of story. you know,
Yeah,
that's actually helpful for me too.
Yeah, no, that's a great point. I think that's a better point to try to relieve some of the murkiness, but also to relieve like, that's just one more decision you guys would have to make. And then we're like, yeah, but we know the market better than you guys do. We're here. We can kind of give you the, you know, the benefits of one way or the other, right? So that would be something that I think we can decide early on.
So like the property I'm gonna put in front of you guys first, the one that I took I was a long video, like 35-minute video of yesterday. Like that's kind of how this came up, because he said, hey, because they were actually planning to sell this property retail, because by the time this is a huge house. This is like gigantic house that looks nothing like a normal turnkey. It's gigantic, big garage, whole. This is like major primary home buyer type of house. And so he originally, when we drove by it, he's like, oh, this is our house, but we're going to sell it to a primary home buyer. Do you want to see it? And I was like, no, because it'll tease me. Like, if I can't, you know, it's primary home buyer. But then as he kind of, I could watch his wheels turning. He was like, well, what do you think about this concept? He's like, let's go back to this, because this property really is kind of a prime case of, if he does the full turnkey, it's going to cost so much to you guys and the rents aren't going to keep up. Like, he knows that. But he's like, but wait a minute, if I sell it turnkey light and it rents for this, that cash flow is actually significantly higher, because if he's going to rehab it, he's going to sell it for a higher price to a primary home buyer. So like in that case, in my opinion, it's easy to know which one is the better option. And I think that's good feedback of, hey, don't present us with that. Like, if there is one that could literally go both ways, we could say so. But if there's one that is going to be blatantly better than the other, we could just stick with that one and keep it less confusing.
Yeah. No. So yeah, that's a good one, Jim. Thanks for jumping in on that. I think we're going to make sure that you guys know right off the bat, like, hey, this is turnkey or turnkey light.
Yeah.
And have a pretty clear sort of difference between what that is. The other thing too, I'd like to say, and we appreciate you guys being here, but you're kind of our beta test group when we're talking about turnkey light. We really just talked about this yesterday,
like less than 24 hours ago.
Right. And so we're, you know, I kind of know in my head exactly what I want to say. And I think she understands it, but like the marriage of the words and like getting it sometimes isn't exactly, when we haven't had much time to really marinate on it and kind of put some things in place about that. But certainly we'll get the message a little bit more clearly defined for you guys.
And Tyler, just to clarify too, separate note, they're not going to offer Berkeys. It's not a thing with them. Wait, we did say, yeah, that's not a thing. But in terms of this, because originally I was thinking of this in Berkey terms also, because this is a way for someone to improve, you know, for you guys to keep the appreciation or whatever. The Berkey is different, because once you guys buy this property, he has nothing left to do with it at all, outside of like general, you know, keeping in touch with property managers.
You guys
or whatever.
Need me, I'll be here, but otherwise,
this is not the Berkey is a little bit different, where that's a very different model, where you're basically giving him your money to rehab your property, and he's stepping out of it. You're buying a rent ready property, it's yours to do as you will. So Berkey is a very different thing, just for anybody listening, to keep those two separate.
Anybody who wants to buy turnkey light and you're like, okay, cool, but I live in, you know, Canada or something, and I'm not going to go down there to like rehab or find the contractor or do all that. Like, we have contractors, we use them, we do rehabs all the time. I expect we'll be doing rehabs on something, whether it's houses or apartments or whatever the heck it may be, in the next couple of years. I mean, this is the business I'm in. I love it. I'll be here. So if, you know, later down the road, you want somebody to come in and look at the house again, you want to decide, hey, I need to paint, or I want to update the flooring, or let's redo this bathroom, whatever that stuff is, we would be happy to step in and see if we can't help you get it done. We just as a resource, right? I'm not a general contractor that like goes and makes money by doing work for people, and I really don't want to be, but we're certainly open. We have resources that can do everything from roofs to foundations and everything in between. And we're happy to sort of just share that experience of resources with you guys if ever needed.
And just out of curiosity, you can either throw it in the comments, or if you email me later with interest, I'd be curious how many of you might be interested in 5 to 6 unit buildings, because at that point you're out of residential world and you're into commercial. So it's a different financing. It's different. all sorts of stuff, but there is a possibility of Ben, I mean, they're already doing some of those properties, but you know, I haven't talked to you guys much about jumping into small commercial world in terms of interest. So let me know if that is of interest, because I can let him know, you know, as things kind of start coming along. So Chris, we did all of that, the specific areas of Kansas City that they focus on and where they don't. We did that about halfway through. I'm going to post, we've been recording this whole thing, so I'm going to take the recording, put it in the group. I'd say for that one, aim for a third of the way in, halfway in. I think we hit on that. And then also Sunny, there was, do you line up property management? We had that whole conversation. That was about 2/3 of the way through, I think. So if you guys have any questions, because I really don't want to keep you guys here all night, and this one's probably exhausted. I would be if I was him, because I've been wearing him out for 2 days. And we've lost him. So if you have any last questions, you can either unmute yourselves, raise your hand, throw it in the chat. We'll just take a couple for maybe 5 minutes or 10 minutes most, if you guys have them. And if not,
We got time. Come on.
okay. I'm like, energy drink.
What do we got? No.
We're good.
Yeah. What time is it? No.
As we all end up with a wine glass in our hand, bottoms up. So if you guys have any questions, you're welcome to. And then if you, I know some of you guys are interested, so I'm going to put in the chat my email address, because everything is so freaking scattered right now. Your best bet is if you will email me, and tell me specifically, whoops, I think I just sent that to just Sunny. I'll send it to everybody. Sorry, Sunny, didn't mean to just send that to you. Everyone in meeting. Email me with your interest, like when you're interested in investing, and also too, if you just want to be on their mailing list, maybe you're not ready to buy something right this second or whatever, send all that over and I'll keep tabs. I'll try and respond to everybody tonight. If not tonight, I'll be getting on a plane tomorrow to go home and catching up over the weekend. Sonny says, thank you both for your time and sharing experience and expertise. It's most appreciated. You're very welcome from my end. So, and thanks to Ben. I don't know if you guys are aware how busy turnkey providers are. It's madhouse. So I'm actually even really grateful that he's taken the time. I mean, touring properties takes forever and exhausting, and I'm asking questions the whole time. So I've been really grateful that I've had the chance to come. And I know for me, like when I see all of the stuff I keep hearing about, and you know, people can send me properties all day long, I'm like, that's great. But when you actually can put some eyes on it, everything changes for me at least. So it's been super cool for him to take the time to, and then to let me rope him into a Zoom call that I don't actually know how to start. So, you know.
I'm happy to take questions if you guys want to type them in, or if you want to try to come on. I think everybody's probably
we got willing to be a guinea pig. I love a guinea pig.
Oh, okay. A guinea pig. Okay.
Yeah,
cool. All right, Jim.
Shoot me an email and I'll copy Ben and Maddie.
Sounds good.
Is sitting behind the computer. If you guys reach out and you say like, you know, hey, I want a particular property, or hey, I want to meet the provider, Maddie is actually probably going to be your first stop. She's going to be your primary point of contact, because Ben is out doing the properties. We can't if we tie him down too much, we're never going to get properties. So Maddie's awesome. Of many of the people I know that work in the turnkey offices, a lot of them are not, they're very frustrating, but Maddie is not one of those. I'm very excited to have a reliable contact for you. Can we
okay, yeah, I
Oh,
see
Anthon?
Anthon's got a hand raised, so let me
You know how to do this? I don't know.
ask to unmute.
That somebody knows. Oh, you're good.
I got it. No worries.
Yeah.
Yep. I'll be after Jim. I'll let him be the guinea pig, but I'll be next. I had one fall through as well.
I mean,
So
we can make it a race.
Yep. That's
Good a time, like release 2 of them in a maze.
I see Deanna here. Hold on.
I have bad memories of independence, but I'll still do it. So
Maybe we could reassociate.
I've had great luck with my Kansas City, Missouri property, and I'd love to have a bunch more. So
yeah. Okay,
I'm
cool.
in there too. I'll be a guinea pig after Jim and Anton.
Sounds good. Sounds good. Anton, did you have a
Yeah.
question as well, or did
Yeah,
you
just kind of wondering what your so is it just class that determines your exit strategy? I'm just wondering, I think you'd mentioned selling some on MLS versus turnkey. Just trying to get a sense of kind of where your interests lie,
Yeah. Yeah. It's not so much on class, although that does play a role. There's sometimes a property that'll come on our desk, and we're not hyper focused on selling MLS properties or retail properties. It's something that we do, but it's not the only thing we do. Like there's some flippers that the only thing they do is focus on Overland Park flips, for example, right? And Overland Park's a nice neighborhood in southern Kansas City area.
Live there.
So we don't, that's not like our niche. More so than anything, our niche is dealing with investors. We will obviously run across a good property that's a good gem, that's a good retail flip that maybe doesn't work out for the investor world. And it doesn't mean we're going to pass on that because it's not our normal cup of tea. But so I guess to answer your question, yes, some of it does depend on that. But then the strategy also depends on kind of like how fast do we have to move on this asset, right? And what other exits are available for this asset. So we're a very, broad spectrum view on stuff. Some people have a very narrow view. I know when I first started in this business, we were a very narrow view focused person. If we couldn't sell it for like 50 to 60 grand on a turnkey and whatever, and rent for X amount with an X amount of cap rate, we just wouldn't even ever look at it. Right. And so now I'm a lot more broad in my sort of understanding of real estate. I'm broader in my sort of knowledge and abilities. And so we do a few more things beyond that. I don't know if that answers your question as well, but we kind of look at everything, every deal, and say, hey, cool, what is the best strategy? What is the best exit for this, up into including us just owning this for eternity, right? So that's also an exit, is just we don't sell some stuff,
Maybe that's where I'm a little, I'm like, no, don't keep it all.
Yeah, we actually don't. We don't. So I'm pretty like, I'm weirdly, oddly, very, very, very picky on the stuff that I'll keep, but it has to be like home run city. It has to be like in a direct path of growth somewhere. It has to be both long-term and short-term options, or it has to be like on a beach somewhere where I'm going to go vacation there. Right. Like there's like, I'm a very narrow, like what works for me as what we hold. I'm very, very narrow on that. So for that reason, probably alone, we really don't hold that much stuff ourselves. Every now and then there's something that's just a smashing, like, okay, like I'd have to be stupid to not do this deal, right? Like every now and then, and it just is the function of the fact that we've been doing this for a long time, and we just we kind of get that softball underhand land on our desk every now and then, just because of where we're at and everything. But every now and then we do keep some, but I'm pretty few and far between with that. We love selling great assets too. We love to be proud of the stuff that we sell. Like it's important to me that we do that. Back in the day when I was selling 30 houses a month, like things kind of got blurry, things got lost in the shuffle. I didn't remember everybody's name and property address and certain things like that. And it's like, I'm a lot more intimate now. Everything has to be on the up and up. Everything has to be winning. We're not selling junk ever. Right. So it's like, I know this is a long-winded answer to your question. Sometimes I do that. But yeah, we're not keeping the good stuff and selling everything else. We're selling a lot of good stuff. I'm just hyper sensitive on what I'll actually keep myself. Yep. The mic's open for anyone else who wants to jump on. Marcus, by the way, I wanted to say hello to you. Marcus,
Hello.
I saw your name here. Frank, I see your name here. That's a familiar name, Frank. So hello, Marcus, and hello, Frank. Just want to say hi. I recognize you guys. And yeah, does anybody else have any questions at the moment?
You may have answered this earlier. How many properties do you have in the pipeline at any one time? Like how many are you actively working on?
We usually keep probably anywhere between 10 or so, like
I like how we all looked
roughly.
over that. Oh, yeah.
Yeah, I'm looking over at
We all-
my board right here, like activity board. Okay, I have 19 on that board right now, but there's a handful on there that are like pending buys. So we're like getting ready to close and purchase those homes. So they're not, but yeah, that's about right though, between kind of like what we have active that we're working on, that's either like done with rehab or something that we maybe just bought that's getting started, like whatever that sort of pipeline of deals is usually around 12-ish or so. And then the pipeline of what we have getting ready to close is usually another handful of deals.
I think that's actually something we forgot to mention too, is if you guys have been around turnkey world for very long, you've probably seen the difference. We were talking about 2011, 12, where a property doesn't even come available until it's already rehabbed with tenants in it. That eventually became like properties were going under contract before the rehab even started, but then you would wait until tenants were in. And so there's been this evolution of when a property gets marketed. So like if Ben says, I have a property available, are you interested? We were talking about that's going to be maybe not before construction has started, but the rehab still has what, a couple weeks
Yeah.
left. It's kind of somewhere in the middle of the rehab. So just so you guys are aware of, you know, if we say like, hey, this property is available right now, chances are the rehab's not done yet, but it's also not so far out yet that it's gonna be a total mystery. Cause that's the other thing about like, before the rehab is even started, you go under contract for it, and then, you know, 3 months later, you're like, where's my property? So what we were talking about is his plan is to offer you guys properties that the end of the rehab is in the foreseeable future. Plus lending's gonna take a minute anyway. So that's kind of,
Yeah.
so you're getting like, technically you're getting before the rehab is completed, but it's already started. So I don't know what the term, we have a whole new vocabulary coming out of this week. I don't know. What that's
Yeah, no, I mean, so we,
called. Pre-rehab completion.
because like you guys are buying stuff so quickly in the turnkey investor world, like you guys are like, there's a lot of demand obviously, and like that whole thing. And so what we used to put a property out and it might take a little while to put it under contract, and we would maybe put the property out before we even started the renovation. And then we wouldn't close with our investor client until inspection and appraisal and everything, you know, then we close after it's all said and done. What happens sometimes, and again, rehabbing is not a science. It'd be great if you could just like walk in the store and buy a good contractor and like, you know, it's a little bit more of an art form, but sometimes rehabs, like you get hit with the unknowns, right? Where you get hit with unknown things that you can't see in the house, like physically in the home that you can't see until you start tearing into it. Those times take more money, they take more time. Sometimes you have to pull a permit for some work you didn't know about, and now you got the city. And so anyway, the point being is that when we would do this and we would release them too soon before the rehab was done, if we got tripped up anywhere along the way with the rehab, then it was like everybody was like thinking something was weird and complaining, and like we got one more sort of party to keep notice of what we're doing. It's like, golly. So what we decided to do is like, hey, until we know, like we have that inspection insight, we have the, like, we're turning the corner. We know we'll be done in a week or 2 or 3, like until we're like, we can see the end fully in sight with no really surprises to catch us up. That's when we'll release it out for all of our investors to be able to take a look at it. I guess what we just want to prevent is like people waiting for months and months on end, waiting for their house to be done, and like complaining about interest rate locks and whatever else it is going on. We just wanted to avoid that. So we'll put the property out with a couple of weeks maybe left on the clock. We're gonna get anything we need P&Q wise out of the way, make sure lender, whatever, earnest money, like we'll get all the kind of preliminary stuff. And then around about that time, we should be ready to get the inspection done, get the appraisal done. And then, you know, we're 2-3 weeks out from underwriting and assuming there's a loan and then closing. So, yeah, did that?
Any fourplexes that could be turnkey light coming up?
I have offers out on some, but no. To answer your question, the answer is no for that right now. But we have offers out. In fact, I just looked at one the other day that's like classic turnkey light, like as in like it's a really good rental, it's already tenanted, vinyl siding, new roof, blah, 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 blah.
So like for
Like-
that, make sure you email me and tell me what you're interested in, because I'm gonna start a list. And so if I know you specifically want a fourplex light, I will put that. And so the minute he says, yo, I got a fourplex that could go light, I can email you straight away, you know, I mean, before even people see it or whatever. So I'm gonna, when we get off of here, I'm gonna talk to them about, because a lot of people either want to get a property now or get on your list. And so I'll talk to them, but email me. I've got emails coming in. So I see all of these. If I don't respond tonight, just know that I'm just getting with them about, because my thought is if they've emailed me and they're on here, I might as well just respond to them and copy you is kind of my thought. And then for either property or the mailing list. So that way you have Maddie's information, you know, obviously you can always get to Ben too, but Maddie's gonna be your first point of contact. Which I won't do, you know, normally for the big gigantic group, but for this crowd, might as well get the first wave of everybody. So if you don't hear back from me tonight, know that an email's coming, and I would imagine unless we come up with something more clever. Oh, you guys want to meet Maddie?
I'll just pop on. Hi, guys. You'll be talking to me a lot, probably. So
Yeah, and
I'll-
she's awesome. When we were touring today, she's over here rambling off property values and rent. Like I was like, all right, cool.
I'll try.
like-
I try.
Like she's not just the chick behind the desk. She's like running comp. She's doing like, she's a powerhouse. So she's going to be your primary point of contact. She's kind of like Ben's gatekeeper, because if Ben's phone was going off all the time, you would never get a property. So
Yes.
I'm thinking we'll just do that where I'll respond to
Yeah.
them and copy you.
Yep.
Yeah. So well, let's plan for that. And
Perfect.
if it doesn't come tonight, I'll try and do it tonight.
Yep.
And if not, it'll be tomorrow at the latest, but that should be easy enough to do tonight.
Mhm.
Cool.
Let's see, was there anything, I just want to review the questions real quick to make sure. Email you, got it, property, okay. All right,
I feel like I have more
Um,
emails coming in than people are on here, which
Yeah.
I'm like, I don't know how that math works, but cool.
well,
I love it. I'll take it.
okay, Deanna said, hey, thanks, Deanna. Yeah, you guys, thanks everybody for being here. I'm happy to hang out longer if you guys, if somebody got something, I'm happy to hang out and chat. That's maybe.
And Matt, I'll email you back. So Matt is Matt still on here?
Matthew Burns.
Yeah, that's him highlighted. He's actually in Kansas City right now.
Oh,
So I
okay.
don't know if you wanted to see properties tomorrow, but he's gonna be at work, but.
Oh, hold on, look at this.
Ah.
Hey, hey, Matt Weiss. Yeah.
Screenshot.
Okay, cool. Yeah, that's awesome, man. He had the Chiefs shirt on. You missed it.
And even if you can't tour with us tomorrow, you can, connect with Maddie
Oh,
and you could come meet them anytime, come over to the office.
Yeah.
What part of town are we in? We don't-
Yeah, I'm like,
Gladstone.
Gladstone,
Yeah,
yeah.
North Kansas City, Northtown.
Yeah. So I'll coordinate with you about possibly meeting up tomorrow. And then if it doesn't work, I'll give you Maddie's information either way, so you can meet them, even though I won't be here.
yeah, that'd be great.
Cool.
Yeah.
Right on. Well, thank you guys and also thank you for your patience with me and
Tech.
Zoom are not like, if you've been on any of the group coachings or basically anything involving me starting anything live, it's just, I need to hire somebody. I don't even understand it, but at least we got on and you guys were patient enough and bared with me for a little headache there, but I really do appreciate you guys being on. I think it was all great info. It's a unique opportunity to actually have the guy, because most of us are never in the same town as the guy or the girl, depending on the provider.
Yeah.
So yeah, super cool.
Yeah, very good. I guess the last thing I didn't ask you this, I'll just, and I'll put you on the
Uh-oh.
spot here, but so you went through a lot of our neighborhoods, cities, like houses, you've seen a lot of stuff. And I know a lot of the stuff is like mid rehab and
God.
not, but like you already mentioned kind of neighborhood quality. You were comfortable with everything that you saw.
Would you
And
guys like to
then-
see how
What
many,
about-
like,
Yeah. There's a lot of stuff that we saw, but I guess we saw some that were like rehabbed or at the tail end of rehab. And I just kind of want to
Oh,
get your
yeah.
opinion of what like the finish, like what you felt and saw. Like if that, just
yeah.
maybe speak to that a little bit. If you thought it was good, tell
It's
us that.
actually
If
really
you thought it
good.
was kind of not good. you can
Hey, you're
say
really
that
good
too.
on, you're really good on camera. Some of the
Yeah.
guys are like, that's a good prompting question.
Yeah.
Yeah. So actually one thing I'm glad he asked, that I thought was really cool. So typically when I've always gone around to the turnkey providers, And I get why they do this, but it's the same paint color in every house, same floors in every house, same everything in every house. And an advantage to that is they get everything cheaper. It's great. But one thing that I've seen with the houses that we've been in is that they actually, and in my opinion, it takes more time and thought to do this, which is great that they offer this, is that they really kind of tailor the rehab to the specific house. So a lot of these houses have perfectly great, amazing old hardwoods. So why rip that up? You know, these, like, I won't say expensive, but like the good, like
Original.
good original, that's the word,
Yeah.
the good original hardwood. So in those cases, they might refinish those. All the houses may get painted a different color. Like they actually really put the thought into what's going to make it fit for this neighborhood, for this house, for the renters that may come here. You know, some of them have had stainless steel, some of them haven't for the appliances, some of them got new countertops, some didn't, but to me, they're putting more thought into the rehabs than a lot of the providers. And I didn't see any of the completed rehabs it was all great quality. There wasn't paint splattered. There was, you know, the paint all looked great. The flooring looked great. Cause sometimes you see like really people cut carpet terrible or like, you know, but I didn't see anything in the rehab at all that made me hesitate. And there really weren't any house. I don't think there was a single house that I didn't like, and you know, obviously some of them were
Like-
either middle rehab or,
And even the ones that are not rehab, you could still see the potential of what we're doing, like
Yeah.
all that. So I think that was probably
Oh.
important. We got a handful more to see.
is that this one?
Actually, we have a handful of other properties we're gonna see tomorrow.
Is this the one? I think, yeah. So like, for instance, there was this one property that I thought was really cool. It was an elderly couple that lived in it for 30 years, Monterey.
Yeah.
And there's a porch. I can see so there's no rehab done yet. So it's all pre-rehab. But one thing that's really cool is I looked around the corner and I have a video of this house, so I'll post that. But I looked around the corner and there was this door coming out of this random section that just kind of dropped off to the ground, like from a second floor. And I thought, interesting. And so what they're actually going to do is build a wraparound porch. What turnkey provider do you know builds a wraparound porch? Like this house with a wraparound porch is going to be so stinking cute. So like what I did not see out of any of the properties or anything was like shorting out on anything, you know, like, or skimping out, I guess would be the better phrase, like to build a wraparound porch. Like there was no, frugality is kind of a word that comes up. Like they're not pinching pennies about these rehabs. Like they all look fantastic. There really wasn't one that I, thought was low quality at all. I thought they
Yeah.
were great. And the housing styles are all good. Like they're really cute houses.
Yeah, they're different. They're not the vinyl village kind of, cookie cutters in a lot of cases.
And like on that note too, like this duplex, like the one, and he mentioned this earlier, but like if something has like the original unique wood trim, or like, they try and keep the authenticity, historic, feel. They're not going to like take these perfectly good, awesome looking historic components of the house and make it this modern weird thing. Like they really put a lot of care into like emphasizing the original type of stuff, when they can,
Yeah,
assuming it's not falling apart.
some of the stuff we find is like these 100-year-old doors and still in perfect shape with the door handles are
Like cool ones.
ornate, and
Yeah.
like you just can't go buy this stuff nowadays. They don't make it anymore, and so when we can keep and preserve some of that stuff, and it's like I hate to see when they have the 120-year-old trim, it's in such beautiful shape and these guys go paint over it. It just like makes me hurl, right? And so I'm not afraid to do a little different. Obviously, like I wasn't afraid 5-6 years ago to tell people, no, I'm not putting tenants in your house. Like I'm just not afraid to do things a little bit different. And on the rehab side, I'm not afraid to keep original stuff because I think it adds value. I think it adds quality. I think it adds some bit of, originality and things that sometimes these homes are missing, right? Sometimes you walk into these updated homes and they look god awful. Like everything's gray and white. It looks like a prison cell. Like there's no color, there's no original, there's no, and this is just my personality. I'm just speaking with you guys, but like, I'm not afraid to keep a lot of that original stuff. Whenever we can keep a stuff like that, original stuff, we really try to. Like, I'm not a fan of polluting landfills if I don't have to. I'm not a fan of tearing out old clawfoot bathtubs if I don't have to.
Oh,
Like,
the one,
I'm-
one of them, which one? Is it
Yeah,
The
Mitchell has one.
the turnkey
Yeah.
light one has an
Yeah.
actual clawfoot bathtub. It's
Yeah.
really cool.
So I'm cool to take that tub out. Like they painted the floor, the claws of the clawfoot, and we'll take that out and we'll get the claws back to actual metal. Like we'll do some stuff like that, right? I would rather spend some time and money doing that than tossing that tub and putting in some surround or tile or
Yeah.
whatever. Like, so we're
And
not
like-
afraid to keep originality whenever it's appropriate, for sure.
Well, and like Marcus will know this picture, but this duplex that I'm talking about, like despite how kind of square it looks on the outside, like when you walk in, it's those big, how tall are those ceilings? kinda has
Probably, I mean, they're at least 9 foot,
They're at
if
least
not
9
10.
foot. Is it,
Yeah,
what's that style? It has that older, big room, big window. Is it Victorian almost?
yeah. Well,
It's got kind of that feel, although I almost fell through the floor, but that aside, like the windows, like just the whole inside had that kind of historic feel. So they're preserving that. They're
Yeah.
not getting rid, it's an amazing feel. It's a lot of character. It's a lot of really cool.
It's got like a lot of the large, like 10-inch trim that's molded
Yeah.
out in several different molds, right? Like a lot of that's still there. On the one side, it's all original. It's never been painted, like the original dark. So we're gonna refinish the hardwoods and make those match the original sort of dark color of the trim.
Speaking of duplexes, I don't know if we
Yeah.
specified that Ben's intention is he's kind of always got either a triplex or a fourplex or duplex running. So this is also multifamily options here as well. I don't think we mentioned that.
Yeah, no, we try to keep, we like to play in smaller 1 to 4 unit and smaller commercial building stuff. So we're, whenever we can find those good deals that are 5 units, 6 units, 10 units, whatever, great. But we're always looking for the 1 to 4 unit stuff that could be purchased with the conventional loan. She mentioned it and you guys get with her at some point, but Ally did mention that, like, if you guys want to look at some larger units per building, like over 4 units per building, then you roll
Commercial.
into a commercial loan and that kind of stuff.
Which if you're running out of mortgages or you don't have the income for the conventional, a 5 or 6 unit building is not going to be, it's not like you're going to like a 36 unit building all of a sudden, from a price perspective, small multifamily could end up being, an alternative for the mortgage situation too.
Yeah, so I'd say reach out to her if you're interested in anything that's a little like different than what we talked about. Obviously, if you're interested in the turnkey light or anything, it'd be good to get your feedback on that.
Likewise, if we buy
Um,
turnkey light, will you give recommendations when we update?
For sure. Yeah, for sure. Recommendations on what to do as well as like maybe when to do it. Yeah.
And also that could
Yeah.
be a conversation with your property manager too, because if it's like, I'm thinking I have a duplex in LA and when we redid the bathroom, it's like, if I only redo the bathroom, what could I ask in rent versus, so it's kind of like, you can ask the property managers are going to know like what this non-renovated unit's going to go for versus the fully renovated. Oh, well, maybe you don't have to do the full renovation, but if you do this, that would definitely bring in, so that's one of those, the relationship with your property manager would also be a key one for that, in my opinion.
Yeah. Yep, for sure. Give you recommendations on that and then you're welcome. Absolutely. I appreciate the sentiment, Sonny, on that.
Not filling the landfills.
The landfills and the original character. I appreciate that.
I think we're good.
Yeah, no, I mean,
Let
we're-
everyone go to bed. Me.
Yeah, I don't know.
Mhm.
I don't know we got a late start, so we
Yeah.
we appreciate everybody being here. We got a little rocky start, but
And I don't fly out until tomorrow night. So like I don't have to be at the airport until 7:30. So we're gonna be together all day tomorrow too, still looking at properties. We're going to Independence and
Independence and Raytown,
Raytown.
and there's actually a couple in Kansas City, Missouri that we're gonna
Yeah.
see that we just ran out of time today.
So if you guys go to sleep tonight, you think of more questions, like email them to me and I'll literally be with him. So I can always ask him whatever, but since I'll literally be there in person, I can get the answers immediately and pop them back over to you literally while we're driving down the road. So cool.
Cool.
All good in the hood.
Yeah, if nothing has any
the KC.
Anything else left? If we're good, guys, thanks again for being on.
And your
Um,
patience.
I appreciate the questions and feedback from everybody. Thank you very much for that. And yeah, we look forward to speaking with you.
And I'll plan to email all of you guys back with Maddie copied on it tonight. So you have that and you can be in touch with her while we're still here and all that kind of stuff.
Yep.
Cool.
Cool.
And then also too, I'll keep everyone posted in the group. Just kind of a quick mention. Now that I'm going to be working with Birmingham, Kansas City, and St. Louis, because I've had kind of separate Facebook groups because I don't want to bombard the Turnkey big group with properties for sale unless everybody wants it. I just don't want it to feel like a sales platform. So I'm thinking about, because I was trying to figure out how to get everybody properties from everywhere. I'm thinking about just starting a second group where it's all properties from whatever markets are going on. So just, stay in tune with the group and I'll keep everybody posted as all of this kind of unfolds. And, we can have videos with the providers, like have a big kind of conglomerate of, more intimate, let you guys meet the providers, I don't know. Now I'm just rambling, but either way, keep your notifications on in the group and I'll keep everybody updated there all the time.
Yep.
Cool. All right, crew. Thank you so much for hopping on and I'll email everybody back and maybe we'll do this again in,
Yeah.
a little while.
Come say bye, Maddie.
Ah, he's going to drag her out of the chair.
Drag over here. Say bye.
Bye, guys.
Maddie's going to
Thanks.
be your best friend.
Yes.
All right, guys. Hey, I see Marcus all of a sudden. Oh, now you come
Hey.
on?
Oh, hey,
come
guys.
on.
Video.
It was for me. Marcus came for me.
I'm sure.
He has
All
like
right.
one
Not the
camera
end.
for me.
Hello,
Marcus.
hello.
Hey, guys.
Yeah.
So
See, I'm
Marcus,
the best
Cool.
friend. That's
we'll
what it is.
also touch base with you too. I'm gonna get with them and we're gonna
Yeah.
talk more about your stuff and then I'll hit you up. Or maybe
Okay,
even
perfect.
you can throw him on speakerphone or something.
Cool.
Great. Awesome. Thanks, guys.
Cool.
Thank
All
you,
right.
guys.
Bye, everybody.
See you guys.